Welcome back, guys, to Capital Mindset. This is going to be another live show. It's kind of going to be mainly to address your guys' questions. If there are any questions, and it's about the newest video that I put out. As you can tell from the attire, it's more relaxed settings. So, don't feel like it's just going to be answering any questions that may be there. All right. So, you guys can hit me with the hardest questions if you want. There is no such thing as a hard question. Just go ahead and ask it, and I'll do my best to answer it here. So, for those of you who didn't see, I actually recommend go check out the last video about the VIEs. And I will address actually some points here and there as to what some people brought up that I didn't answer in detail during the responding time. So, because I just got off work, took a shower, hopped on again. You guys are probably already home by now because it's 9:30 p.m. Eastern time right now. Well, actually, if you're in the West Coast, maybe not, but you're in the East Coast, getting ready for the next day. So I guess let's actually go over some of the comments, I guess, that I received on that last video. And let me actually be careful because I don't want to blast you guys with an accidental audio wave. Let's see here. Okay. Yep. Suit is off and everything, right? I'm in this is the one and only time you'll probably ever see me in a sleeveless like this. I'm I'm in North Korea. Julius Caesar. I don't know where you're from, but that'd be funny. All right, so let me get to these comments because these comments were actually pretty good, if you ask me. So some of them were pretty deep. All right, and I'm gonna actually put you guys here to the side, and then have it right here. Let me know if you guys want me to share my screen and you guys can read, but I'm hesitant because I don't know if these people want me to show the comment, but all right, so I'll summarize it. Essentially, it's addressing a lot of the risks with the VIE structure. So I can address each by each point if you want to, but for the most part, it's about almost an hour long video. I go a little bit evening, Dom, by the way, and hey, Alex. But let's see how I can do this in a quick manner. Like give you the Spark Notes version of it. Essentially, with a VIE structure, it's a Chinese VIE structure because I've addressed other types of VIE structures in the past: American VIEs, British VIEs, specifically focusing on the the Chinese variant. And I actually focused on BABA because everyone likes to talk about BABA for some reason. With that, I wanted to focus on the main focal point because a lot of people were saying the risks are delisting, right? I'll answer that question in a second, Chris. But if it is these Chinese internet stocks, it's actually quite a bit. I actually don't know the answer off the top of my head, so that's why I'm not answering that immediately. But for the most part, what I want to focus on is the difference in what you're basically evaluating. So I think all of us can agree that we know how to evaluate the basics of stocks, right? Right. That's Finance 101, one of the first classes you take in university. It's also very open information, you discounted cash flows and all that. And then you also learn in that same class, that beginner class, how to evaluate a bond, right? And a bond has stipulations on time frame, on quantities of repayment, etc. Well, a VIE is a contract, except with no stipulations. And that's the main point that I actually want to focus on, because I saw that there were some comments that were saying that my main focus or the primary risk factor is delisting. And in fact, I made a point in that video to say that the primary risk factor is not delisting. Okay, so I want to be very clear by that. So I'll go over, again, some comments here. Because I told him that I would respond or make an announcement in this live stream, specifically addressing these comments. So I'll go ahead and just, what do you guys think? Should I show the comments? Just share my screen here, or what do you guys think? I guess I'll just show them. Check out. All right, so I guess I'll just show the comments here. So let me see. We can share my screen. All right, video share screen. All right, so right here, I'll actually just cover this up and we'll just see the comments. So right here, I'll focus on this one. Let me actually zoom in. Oh, did I actually downvote it? I'm sorry. I'll upvote you. That was a complete accident. All right, so we'll stick to Jamie. Jamie right here. You kicked the S out of this company for an hour video, but oh, by the way, you own it. This is pretty comedic in and of itself. Yeah, it is pretty funny, to be honest. This is a classic example of someone overthinking a situation. You make some excellent points. Thank you, Jamie, and seem to have every nuance covered, but fail to realize that you are describing things that are extremely unlikely to ever happen. The VIE system is largely out of trust. Agreed. Yeah. Violating that trust just to screw over the shareholders would to destroy the system. Okay. Yeah. Be catastrophic to the Chinese companies and effectively cut off foreign capital investment in Chinese companies forever. The nature of the Chinese stock today seems to be factor every possible risk imaginable. Okay. So I'll say this. At what point is the contractual arrangement broken? And I actually want the audience here to answer that live. So if anyone has an answer, let me know. Because again, this is a contractual arrangement. So contractual arrangements typically have time stipulations, completion stipulations into the future. There is no such thing for these entities. So at what point is it broken, right? Let's say we do a business arrangement and, you give me $10,000, right? And in exchange, we create like this sort of contract. And I say to you, hey, you're gonna, you get whatever profits, and you ask me a couple questions. You say, okay, Fabio, well, when am I going to get that money back? Or when am I going to get some money? When am I going to own the profits? And I say, well, we'll see what happens. That's what I answer to you. We'll see what happens. So I don't tell you a definitive time. I say, sometime in the future. And then you say to me, well, how much will it be? And then I respond back as well. And I say, we'll see what happens. All right. That's essentially what the primary risk is in this instance. It's not the delisting, because as I stated several times, there is no reason for them to delist whatsoever on the Chinese end. There only is a risk, I believe, my personal opinion, within the current risk within the United States government delisting, or the West saying, hey, that's not a fair arrangement. I don't think that's fair. We won't allow you in our markets. Okay. That is a possible risk. But of course, you have the structure within Hong Kong, right? So that's basically the crux of it, right? Everyone, when I saw the comments kind of making some counterpoints, everyone's kind of focusing on the delisting risk, which is again a point actually in the video where I say most people are focusing on the delisting risk, and then lo and behold, a lot of the counterpoints are focused on the delisting risk. So Elemento Tamago here, he has a really good comment here, and I said I would respond here, but so let me see if I can summarize. Chinese VIEs are like a class of shares beneath non-voting shares. In a way, yes. While voting shares give you the right to control the company, non-voting shares give you the property rights over a company you cannot control. Yes, that's correct. Meanwhile, VIE shares will match the returns. That part's not necessarily correct. So yeah, there's an implication that there is, but it's a contractual arrangement with no stipulations on when and where and how much. And then we'll get to the tax implications of it, because I think he addressed, or someone else addresses that. But if something happens, you have no right to complain. Yes, exactly. And I've addressed that because there are court cases in which it's happened. When push comes to shove, they choose themselves over you, essentially. So you only have returns equivalent to if you did have ownership. On top of that, those returns might face additional taxes. Well, yes, yeah, that part is true. He's addressing one of the points in the video where I showcase an example of how taxes can be treated, not on your individual basis. And by the way, you should talk to your tax professional who knows your situation, but for the company itself, regarding like corporate taxes transferring within and out of entities in China and internationally. Okay, so yeah, I agree. Okay, they just trade for a discount. Well, the discount, funnily enough, I don't know how much of the discount is actually attributable to that tax implication that I discussed in that video, which I might, if I have it pulled up still, I'll bring it up and I'll show you guys. Okay. So the second part of the comment is the whole idea that contract rights are weaker than property rights is strange to me. Do you really think the CCP cares about this? Well, the point is that it's not to be focused too much on property rights versus contractual rights. You're kind of right on that, but the point is that the contractual arrangement is much easier to break, especially when you've already ruled it to be illegal. So international courts can't even really complain about it should it happen, right? And by the way, it has happened in several instances, as I stated in the video, with other companies where the CCP cannot will just, delist a company and, screw the Western shareholder, because what they essentially do is they nullify the contract between the entities on the mainland and the entities in the foreign soil, because you don't even own it at all. So in that sense, it's if I just take away property from you, technically the international courts, you could do something there. You could complain there. But in this instance, you can't even complain there because you're still technically breaking local laws in that sense. Okay. So they've already ruled that it's not something that is allowed. They're just kind of letting it, because if you really stop to think about it, it makes complete sense. Why would you not allow it to happen? Right? You're essentially getting money, right? But not really giving up any ownership in between. And it's like that example I said at the earlier in this live stream, right? If you want to give me $10,000 in cash and I just, say, oh, I'll pay you back at some point in the future. I don't know when, and I don't know how much. Okay. Okay, so then maybe in the West that would matter, but I think the CCP is going to do what it wants no matter what. Yes, it will do what it wants no matter what, but that doesn't mean we have to necessarily, or I personally want to participate in it. I own Alibaba and Tencent, but for the two reasons I've always stated in the videos. And by the way, in this video, you can look at the playlist and see all the videos going back from the beginning of this channel and what I discussed. And in the December video, I discussed when I was buying, why I was buying, and there were two main reasons. Okay. So don't paper hands. Okay. I'm seeing the comments you guys are saying just now. Yeah, you held for 1 hour. That's funny. All right. So let me see some other comments up here. Because there were some ones that were addressing. Oh, here's a counter argument. Okay. So, and again, and by no way does that mean, why is it, all right, let me zoom out. All right, so hopefully you guys can still see, because I have to zoom out otherwise, because there's no expansion option, which is honestly weird. If I hide you guys a little bit, there we go. All right, so I would like to add somewhat of a counter argument that you may have missed. But if China did choose to enforce the VIE law on various companies like Baba, the amount of money they would wipe out from foreign investors would be massive. And in my opinion, this would most likely be met with some geopolitical ramifications. I absolutely agree. In other words, an incentive for them to continue not enforcing the VIE law would be to continue to gain foreign capital and to avoid the possible. Yes, absolutely agree with all this. Actually, this is the main thing. I think that's what's going to happen, right? So there's no reason for them to invalidate it. They're going to continue the party, but the point still remains. That's not the primary risk factor. The primary risk factor is, of course, the fact that, again, we are entering into a contractual arrangement, but treating it like a common stock, right? So if I came to you and I said, hey, I need you to evaluate this investment for me. And then you understand, right? So you have common stock, which has no time stipulations, no stipulations on completion or anything like that. It's ownership right, so it's governed under, again, property law. That was the point of me making that statement of property law, contract law. But instead, I'm going to throw at you a contract, and in that contract, I'm going to say to you, hey, there's no time stipulation, right? I don't know when you're going to get the paycheck for the contract, and I don't know how much it is, and there's no completion time. That's very important. The people are sleeping on that part. The completion time is extremely important. So, like, hypothetically, 1,000 years could go by and none of the cash generated by said business could be given to you or the Cayman Islands entity, and that hasn't broken the contract. I don't know if anyone answered that question, but that's the main question, of course, is at what point is it broken? Okay, what do they have to do to break it? I'm talking about the company itself. Okay. Are you guys talking about via ARC? Okay, so ARC and stuff. So Fabio, do the Chinese have to use the VIE to own American stocks? Not that I know, because I'm not an expert in domestic Chinese policy, right? So that would be a question for someone else. I will only answer questions that I feel comfortable that I can have an answer to. Otherwise, I'll cop out and say we must ask subject matter experts. But I don't think that. There might be something there. There might be something there. I do know that, for example, there are a lot of capital restrictions. This I can't answer with confidence. There are a lot of capital restrictions on how much money can move out of China. And that actually goes with not domestic, but foreign companies doing business within China. So it actually changes the valuation prospects of how you evaluate a business doing business in China. So I don't know about Baba losing market share or anything like that. My whole focus is mainly on just the structure of ownership that kind of nullifies everything else for me. Oh, yeah. Okay. So he he said some things that made me feel like he actually watched my videos and then started just saying some stuff, but then he misquoted something. He said something that was incorrect. I think it was had to do with Tencent, which was interesting because he's an expert, Julius. So All right, so let's see what's another question. I'll go ahead and share when I find another question. Oh, by the way, just in case anyone had this question. Oh, okay, Jamie, you're here. So Jamie, all right. I don't know if you already saw me addressing your question, but I'll address you live here. It's better this way because you can ask the question on the fly. All right, so I still don't see the big difference between the contract of the VIE and the ownership of stock. Unless the company is liquidated, you are dealing with the market valuation of a business. And I forgot to do this. I need to get used to doing these live streams. All right, so okay, let's kind of conceptualize this, right? So we're saying that there's no difference. Are you saying, and I need to ask because I don't want to put words in your mouth, Jamie, are you saying that a contract is no different from common stock? I need to get that answer from you. And we can talk about Facebook. Don't worry, Cult Machine. This is mainly to address any loops I may have missed or some points that, and give everyone a chance to kind of quasi debate here, but not really. So Jamie, when I get that answer from you, then I can answer your question. I need to know, are you a little bit more of the specifics of what you're saying there? You're dealing with the CCP if you're investing. Yes, you are dealing with the CCP if you are investing in China. Okay. Yep. Yep. Paulo, yeah, you got it, actually. Yeah, that's the primary risk factor. It's not the invalidation of it. It's the point that I'll ask the question again. Is there an instance in which the contract is broken? All right. There is a difference, but unless the business is liquidated, does the difference matter? Yeah, it does matter. Okay. Because in for example, when you own common stock, do you only care about liquidation? Like what is the point of owning common stock, right? It's not so like contract versus common stock. In fact, if you're wondering, contracts are more protected under liquidation. By the way, I want to actually, I don't know if you thought about that. So, for example, bondholders are above, right, and that bonds are contracts, right? These are like the best of both worlds for the issuer because they're getting, for example, the best parts of common stock, right? Because why do I issue common stock? I'm giving up all the future potential, but when I issue common stock, for example, in an American company, I don't give up time stipulations on return of capital. However, I am giving up the potential, right, of all that ownership of that return of capital because it is ownership at the end of the day. In this instance, I'm not giving up any ownership whatsoever. I am giving up, and I'm not even giving up a time stipulation. So it's a contract without a time stipulation, which is the big key factor here. All right, so it's not even the shady government. It's one guy making unilateral. Yeah. Okay, so this is getting into the governance factor. So that's getting into the macro level. I'm kind of sticking a little bit more towards the micro, but yeah, cool on 2K. That's that is a good point. And yes, China's economy is slowing. So it's actually slowing down now more for unforeseen events because they were doing some crackdowns, liquidity crunch in the real estate market, and they had the liquidity crunch before the United States did, which I was addressing sort of last week, and a bunch of other creators actually were talking about it too. I think I don't want to address the whole thing again, but if you want me to, I can talk about it a little bit. But Chinese real estate, that's the main thing. And then now we have other things, like for example, China's more sensitive to oil than something like the United States, and it's not a good position to be in. Yeah. So, hey, how you doing? Licks. All right. So Chinese to make money, printer go burr. Yeah. Yes. All right. So most economies seem to be in contraction at the moment. Yes. A lot of well, of course, war is not a good thing. War is definitely not good for economic growth. Supply chains are going to get even more messed up. I mean, we see what's happening with potash, wheat prices. Oil's coming back down again, but we'll see what happens. I mean, that's again what I'm selling out my oil. I mean, I already made content. It's not a surprise, but yeah. Aerojets, I'm just holding it. No plans right now. I'm seeing what they're doing right now with the internal conflict that they're going on with that. They have a lot of property in California. Trying to see what they're going to do with that. Could be interesting. Might not be anything. But I do like the assets that they hold. All right. So, and that was addressing this question over here, just in case you guys didn't know. All right. So, Jamie, let me know if I answered your question. I think I can kind of address your previous question now because I understand a little bit more. But yeah, the difference between the contract VIE and ownership of stock, the big difference is quite literally fundamental. It's ownership. Don't own. that actually eliminates the ability for you to have any sort of semblance of control over the economic rights. Okay, so economic rights are very important. So it's separate from voting rights. All right. Hey, no problem. Anytime. I mean, you guys have any questions, you just bring them up, and we do this. Normally, again, I'll stick to the Friday, but I wanted to do it, heck, I was like, I'll sleep later than normal to address some questions. Okay. Do you think that one can be a good stock picker without understanding the basic? Yes, of course. The bond market is a little bit more complicated because, well, depending on how macro you're getting with the bond market, you're talking about just only knowing corporate bonds, or understanding like the euro dollar system, which is a little bit up there. So China ETF, FCLH. Well, the problem is, if I fundamentally believe that it goes against my bedrock philosophy of investing, so I wouldn't really touch it. For me personally, I'm not saying for you, but for me, there are some Chinese stocks that are not, and they actually have net capital outflows, so that's good. But they're very not the VIEs that we're discussing here. Okay. Cheers, appreciate it. Yeah, no problem, Spencer. Enjoy it. What happened to some of the hexagons behind you? Okay, so yeah, that's a good explanation. So when those first came in, it came in with like very bad tape. So I actually had to. I'll show you guys this. I bought this new tape. Might as well address this question because you guys asked, I guess. So I got this new, much better double-sided tape, not the cheap stuff that came with it. So they just fell off. It's nothing big surprise. Okay, I'll get to you in just a second, Jamie. Let me just get through the others. How can I sleep at night holding Baba in my portfolio? Yeah, you see, that's the difficulty of it, because I don't want to make content and people think that I'm, rejoicing in any form of like the stock going down or anything like that. So I did buy it in some semblance that, as I stated in the video when I did buy it, that if it goes down, I'll try to suffer alongside you guys. Of course, maybe a lesser percentage of the portfolio, but I have to still stick with what I fundamentally believe as proper capital allocation. All right, so we need to know. Yes, you do. You do. That is very good. Yes, you do need to know that. But for the most part, that's just long-term interest rates. Long-term interest rates. You could, there's a debate to be had about what the risk-free interest rate really is, because as some super investors have said pretty promptly, some might say that it's return-free risk. But it's another way of saying it. I like that statement. It's kind of funny. So I think you answered it. I just view the implications to me as an investor a bit differently. It's okay. I listen to this channel to channel. Okay, fair enough, Jamie. No, that's the point, though. We all can have differing opinions and all that. So remember, like my fundamental opinion is that in order to invest in anything, you have to actually own it. And I've had some subscribers disagree with me on that in the past. And the point of this channel is never to say, oh, you're wrong and you're dumb for disagreeing with me. I'll leave that to another creator, but I won't be like that. Don't worry. Yeah, right here. So Baba ADR holders have the right for at least two. Julius, you cracked me up. All right. Yes. Yeah. No. Don't worry. It won't be that. I'll get to Facebook in a second, because I saw one of you ask about Facebook. I'll get to that. So, with the limited amount of money entities can move out from China, do you see the yuan being used to trade oil, say 10 years from now? Could be posturing, given that Saudi said. Okay. Yeah. Wow. How did you know about that, Garkin? Did you read that somewhere? I'm curious, because I haven't really addressed in depth the capital restrictions that China inputs on even foreign companies doing business in China, which people don't even evaluate. They don't even take that into consideration when they're evaluating stuff like Wynn Resorts, which, by the way, Wynn does disclose that. But yeah, I do say, you know what, you're bringing up the positions of Kyle Bass and the like. For example, the problems with China trying to become the world reserve currency is simply that they're too restrictive, right? And yeah, that's a very good point. So you got to take that into account when you hear, maybe a lot of fear mongering regarding China becoming the world reserve currency and all of the such. As long as you're very restrictive in that sense, it's very difficult to make a case for that. All right. But it could still happen, I haven't taken a look at it, but I'll definitely add that to the list. I'll add that to the list after this is done. In fact, I'll write that down right now. Embraer. Okay, and then I'll do a video on that. All right. The cult machine is it's the okay. Oh, you're responding to someone else. Sorry. Oh, good night, cult machine. Oh yeah, it's 3 a.m. Yeah, go to bed, man. But glad you came on, of course. All right, will Baba go to 50? I have no idea, Joe. Okay, so here's the thing. I think it is only of my opinion that this is sentiment driven, and so for the time being, I do think that going forward, the Chinese government is going to try to quote unquote coddle the Western investor, coddle Western money back into the country because they still want to build up. It's basically free money, so why not? So with that being said, because I think it's sentiment driven and not really fundamental driven, and when be very mindful that when I mean fundamental driven, I think it's very different from when someone else probably means fundamental, because what I mean is the fundamentals they don't matter for a VIE, quite literally. So with that being said, I do think, again, sentiment would play favorably. Okay. I hope that makes sense. By the way, if you ever feel that I don't answer a question fully, you're within your full right to ask the question again and say, hey, you didn't answer the question. Please answer this question. All right. There's not a politician speech. All right. So do you need to own the business, but yet you hold Baba? Yeah. So remember, I hold Baba for the different reasons I stated. The main reason is when I speak about these situations, I don't want anyone to think that I relish in the fact that it was going down or not. And at the time, I still think that at the prices I was buying in, it's quite literally the thesis is a greater fool theory for my position. But the primary reason is, again, YouTube accountability, right? That's it. If you look at the public portfolio, you can see the size of it. I'm not adding any more, no matter what price it goes to. Okay, just so we're clear on that. Oh, okay, that's to answer to Joe. Okay, and it's coddling the Western investor more important than keeping tech in line. It seems like a balancing act. Yeah. Okay. So, but that's just it. They are doing a balancing act. So the Chinese government, being as authoritarian as it is implementing a balancing act. But the longer term picture is correct, that they do want to get that nice juicy Western money so that they can build up their businesses. Of course, if they can do that without giving anything in return, that's even better. Okay, so that's what I like. They're basically winning in that sense. I mean, no one has a better deal than them. Okay, so yeah, okay. I did not know this. I didn't really do any analysis on it because I don't really do an analysis on a business that in depth as far as the business metrics go. If I already think I can't even own it, right? It's like it's like if I was a someone who wasn't actually looking at buying a privately held business, but I'm analyzing it anyway, right? Unless I'm doing it for like a case study for a university or something like that, there's really no point. So that's why I never did. But yeah, sure, JD. Well, by the way, I don't know if anyone knows this, and JD is actually the Amazon of China, not Baba. Baba's like a super. Well, actually, no. Tmall, I think, is kind of like it, but no. JD's always been the one that was actually the Amazon of China, minus AWS. Okay, so people don't know that about JD. All right, so yes, I still own Overstock. It's still in the speculative side of the portfolio. It's not really moving in terms of allocation. I might add if it comes down, but it's remaining a speculative portion of the portfolio, and that's where it'll stay. There's no such thing as a dumb question. Okay, so you can ask whatever question. I will never judge anyone's questions. So I have what might be a dumb question, but if a firm issues a share and nobody buys it, then what happens to the share? Like, where does it sit, or what? Or is the share then not counted as issue? No, well, the shares, okay, so this is a very hypothetical scenario that you threw at me, Paul. So I'm going to make some assumptions here because we have to create the scenario framework, right? So let's say I issue a share and I try to sell it onto the open market. If there are no buyers and then there's a selling pressure, exerted onto the market, the price will go to until there is a buyer, right? So hypothetically, let's say there are no buyers ever at all. So where does the price go? Well, it's worthless because no one wants to ever buy it. And that's the assumption that I just made, that no one will ever want to buy it. But again, that if you're issuing shares into a market, right, where there's buyers and sellers, actions of buyers and sellers, then you got to think about, well, what is the buyer demand versus the seller demand? If you sell too much, that's why it can cause selling pressure when someone dumps shares, right? When a company, if they issue a bunch of shares, that could cause pressure on the selling side because you're issuing more supply. I hope that answers that question. Remember, if I didn't answer the question, just comment again and say, hey, you didn't answer my question. Okay. Did you pick? Okay, this is a question about BHP and Rio Tinto. I mean, you probably saw the portfolio. So the reason why I had BHP and Rio Tinto in the portfolio is because I did have a suspicion for that we would have commodity price inflation to some degree. I didn't expect to this extent. In fact, Rio Tinto is not doing good. Only BHP is doing good. BHP is outperforming, and then Rio Tinto is well, it's neutral. So it's technically outperforming too, technically speaking. So it wasn't bad. It was basically having a savings account. But BHP did really well. I'm happy with BHP. Rio Tinto has a little bit more exposure to some riskier areas apparently now because of this whole conflict. So would you avoid specialized? Yeah. Okay. So, and then going to the crux of your question, they are diversified miners, and yes, that is a big reason why I like them, because they have a lot of sway, so to speak. If you know what I mean, sway. They have a lot of sway in the markets that they operate. Okay, so in Cameco and Kazatomprom, if I pronounce that correctly, yeah, they're in the uranium space, and I think they might be doing really well, if I remember correctly, because of all that's going on, and that's kind of in making the prices of uranium do interesting things. But longer term, I mean, it's just a concentrated risk that you would really need to understand the uranium space, and that's usually my philosophy with commodities. I think an investor should really understand commodities if they're gonna participate in them. But yeah, that's basically it. All right, so interesting how Munger owns Baba, even though he doesn't own it. I find it surprising such an investor would touch Chinese VIE. Any thoughts? Yes. So I actually addressed this in the video. I've addressed this in other videos, but I'll address it here for you too, here, Spencer. So I think it's simply that Munger is more like an optimist in this sense. So I call it, and I know it's kind of cringe to say, but I call it applying a Western normative narrative to the entire world, right? So we can understand that the West has specific business culture, specific laws, etc. And what he does works in one part of the world, but if you try to apply the same formula to every jurisdiction, you might find that some areas are different indeed, and they are unique. And in my opinion, China has shown, and clearly by what I believe the evidence is overwhelming, it is different. So in that sense, what I think is what he does works in most places of the world, in the grand majority of places in the world, but he's just taking that formula, so to speak, and applying it to a country where it doesn't really apply because it's a bit different. Okay. So, all right. So good to know that I did answer your question. All right. So, okay, here we go. Kathy Wood question. Oh my gosh. All right. So Fabio, if Kathy Wood goes to 100% SAR portfolio, that's the short ETF. Oh yeah, you say that right there. She will. Will she in turn bankrupt both companies? You're saying wait. So you're saying that if her ETF sells off everything and then shorts, but no, you see, there's a short interest thing that you have to factor in. So no, yeah, I think that it would be really silly, and she would bankrupt it on the sense that she might have tons of outflows and she might pay a ton in short interest because she might be the market maker. I think the SARC ETF is smaller than her. I know I'm getting really technical with you, and you didn't ask for that, but there's some, that is an interesting mind game right there that you kind of introduced. But the answer is probably, but not for maybe the reasons you're asking for. Okay, yeah, she should. All right, so Garkin, it seems convenient. Sorry, it seems really convenient. Whenever the CCP needs the money, big tech will suddenly be fined. Yeah. Well, they are extensions of the government. We have to remember that. That's how it appears to us. To them, they are just extensions of the government. Q Tencent facing record and fine for violating anti-money laundering laws. Baba fine for antitrust. Yeah. But you get the picture. So it makes a lot of sense when you really get down to it. The political structure within China is, as Strongman actually rightly pointed out, it's more in line with something that we would call a fascistic, not communist, right? Because you can't own the means of production within China. Well, you can't even own land actually, but you can own corporations and companies to an extent, as long as the government allows you. Okay, so it's everything is for the purpose of the state. Imagine having yeah, that would be funny though. All right, so accounting question. I made a ton of capital. If it's tax question, I have to be very careful how I answer this, Alex. This year I have heavy capital losses so far. Is there any way to carry back the losses to? I see that's too specific. Yeah, I won't be able to answer that one, unfortunately. But that one, you could probably look up on these tax websites, and they can answer that real quick. That seems like it's an easy question. All right, so and by the way, I do it out of an abundance of caution, because maybe it is something I can legally answer and not get in trouble for, but out of abundance of caution, always have to be careful, especially on the internet. Okay, so why are the yields so high? Okay, so that's basically linked because they had record profits and they raised the dividends for now. And I think maybe I can pull this up. So, oh, okay, I'll get to your question in a second, Pablo. But actually, I'll just leave it here and I'll answer the question. So, Rio Tinto and BHP, they had record profits, and so they raised their dividends. Don't expect that will be consistent or sustaining. I think, for example, Vale is another one I can point to that looks like, I think it had like a 20% dividend yield. And so don't think of it for the dividend. I just want to be very clear. But Vale, they have a policy, and I think it's a payout based off of EBITDA. There's too many stocks in the world and too many things to memorize. But EBITDA, I think, is their policy. And I want to say it's 50%. But again, that might be off by a little bit. But the point is, they have a policy that they pay off 50% of EBITDA as dividends, right? Regardless of what the year. So in a really good year, they're going to pay higher dividends. In a really bad year, they're going to pay less dividends. Okay. So if it's an accounting, academic question, yeah. So since you know accounting, I'm going to go ahead and use this opportunity to ask some questions. What is the common stock in the equity part of the balance sheet? Okay, so you mean excess value par common stock. So also, what website are you using? Very important. Or are you just using the 10K? Yeah, I need to know that, because are you meaning common shares outstanding? Because if it's just the common stock, then that's just the par value of the common stock, which is we list that on the equity, and that varies or depends. And I'm guessing you're talking about GAAP and not IFRS, because that's also important. No problem. Thanks. Which business? Okay, which business is likely to be there relevant in 100 years? Coca-Cola, Procter & Gamble, Johnson & Johnson. I think Johnson & Johnson. Of those three, Johnson & Johnson, because medical technology will always be there. But then again, branding, man, branding is really powerful. Because branding, it's like, okay, sure, someone builds a better technology than you, but you have the better brand per se. Like, okay, so how do I improve soda? I don't know, but the brand Coca-Cola is very powerful. So, or like, how do I improve? Oh, I don't want to get there actually, because you could probably improve Tide detergent. Okay, so ticker terminal. Well, I'm not really familiar with ticker terminal, but it depends on how they're listing line item, because I'm thinking you're referring to excess value par common stock, which is, it's just an equity part of the, it's in the stockholders' equity, right? It's specifically in stockholders. I think you said that. Wait. Yes. Okay. So if it is in the equity part of the balance sheet, that's excess par common stock. That's not actually the shares, right? And it's not even the market value of the shares. It's just what they call as the book value of those shares. Okay. So don't think that that's the what they could sell all the shares for. That's not what that means. Yeah. Yes. Yeah. Julie said it's completely arbitrary. I would ignore it typically. It's not something you should really focus too much on. Okay. It's not going to be a deal breaker. It's not going to be like, oh, this value is this. It's terrible. All right. Okay. So, I guess I'll discuss Facebook, because I had a question about Facebook. I don't know if you're still in the chat. But Facebook, I didn't even check the price today. And believe it or not, sometimes I'm too busy and I actually don't even get to check the market. Oh gosh, darn it, it went up. Yeah, I'm a little salty there. All right, I'll answer this question. Based on the assumption that it is the extension of the government, why would any investor still invest in Chinese companies based on their financial reports? Losses can balloon anytime CCP sees fit. Well, you want to be invested in the growth of China. Like that's usually if you listen to investors, and I can respect that, by the way, because obviously when a new investor comes into the market, they're like, okay, what's the future, bro? And then you think technology stuff like that. Oh, but what about countries? And then you go, okay, what country is the future? Well, if you look at Western media a lot, it's China. China's the future. So with that being said, you say, okay, how can I get exposure to that future, because it has all these billions of people and all that. So the allure is there, and it makes a lot of sense, right? The underlying thesis in that regard. So that's why people are willing to take the risk. I mean, if you listen to a lot of people, they say those words, I'm willing, I think the risk is worth it, right? So you have some people that do a responsible amount of investing, I'd say, into these assets, right? So I'd say, for example, the live stream show that I always go on with Strongman, Jay Nagi, and all them. So they have a responsible amount. It's not going to kill them if things go poorly for them, but it's a responsible, because capital allocation is really important in life. Because rule number one, don't lose money. Rule number two, don't forget rule number one. Overused quote, but whatever. Who is my favorite investor? Okay, so it's between Howard Marks and Warren Buffett. Howard Marks and Warren Buffett. It's one of the two. I know Warren Buffett's the normie one, so I usually say Howard Marks, but Seth Klarman's also really good. Seth Klarman's actually really good. So hard question to answer there. All right, so thing with Facebook, I'm still buying Facebook. It's shown on the portfolio. I'm still buying it pretty much every week, and I'm still selling ConocoPhillips. Oh my gosh, I sold a decent chunk when when it was at the 100 mark, and then I wish I sold it all. Hindsight a little bit, but we'll see, because I always have my strategy, and I just stick to it. I stick to just making my sales here and there, and I'm going to bring that position down, and I might soon bring down the position in my materials companies, maybe if I see that. But I'm already really kind of heavy cash, so I'm more focused on deploying. And my gosh, I can tell you guys right now, things are getting really interesting. There are a lot of interesting little opportunities that are being picked up in the market. I mean, like, gosh, I don't know if you guys want to talk about that, but rule number 3: avoid dropping the soap at the truck stop. Yeah. Yeah, if you forget rule number 2, you're gonna have to remember rule number 3. Yes, I do. I do sell puts on stocks that I like to generate some extra income. So when I'm heavy cash, that cash isn't always just idle. Depends on what I really like. So, for example, most recently that I sold some puts on is Facebook. So what you kind of want to do is, when sentiment gets a little bit bearish, you sell some puts on it. My option strategies are not disclosed, by the way, in the portfolio. I think that would be a little bit irresponsible for me to do. But yes, I do sell puts. I think puts. I also sell calls, by the way. I sell calls to generate also some extra income. There is a tax implication, but as long as it doesn't execute, it's fine. Extra money is extra money. That's how I look at it. But yeah. If it dips below 165, I assume you're talking about the support levels. Okay, and yes, by the way, technical analysis is kind of real. By the way, it gets into like behavioral finance and all that. So elaborate. Yeah, so with the liquidity crunch, it brought down a lot of stocks that were really flying high. So, for example, I really was talking not so nicely about PayPal. Even after PayPal dropped, I still, made a video about it. I think it got mixed reception because obviously, like, I'm not gonna change my opinion based on popular opinion, but I thought PayPal, even then, there were a lot of risks. But now it's like below 100. So obviously there's a price point, guys, right? So PayPal is just one of them I can think off the top of my head. Salesforce, I have to do an analysis on that one. NCR, I did an analysis on it. I never pulled the trigger, but it's still looking interesting. It hasn't really come down. Facebook, obviously. Google, what has Google been doing? Google's my largest holding, and you see how relaxed this is how you're supposed to do it. You just don't look at your positions every day. So I don't even know what Google did today. All right, Google's at 2.5. All right, like, okay, so Google is still not where I'd be you know, getting excited. But I'd always love to buy more Google. What's another one? What is another one? Let me see. I write them down here and there. Some of the oh, you know, believe it or not, I was looking at Intel and Cisco. But Intel, you know, I also had the opinions that I guess were against popular because there's a channel at Everything Money, and I guess a lot of viewers here, we coincide. So when I was talking not so nice things about Intel, you know, again, differing opinions, and I welcome it. But I did say that I personally believe that Intel, but you know, I don't want to conflate that and say that, oh, it's I predicted it. I didn't predict anything. But there is a price point in which I think my concerns are addressed, and it's getting close to it. Oh, okay. So depends on the bank. Patrick, very good question. Depends on the bank, because it depends on the ability for that bank to make or generate returns on that book value. So I actually say this, or I will say this in the bank dedicated video. And I've had questions about this from other subscribers saying, okay, what do you like about Citigroup? And it's like, it's not really anything that I like about Citigroup. It's just the stepchild that stayed in there. I sold off all my banks already because they were sold as part of the preparation for the liquidity crunch, right? So I had JP Morgan Chase, I had Bank of America. I loved those a lot more, right? As companies, right? I personally am a huge customer of Bank of America. In a variety of ways, right? And JP Morgan as well. And I'm not really a customer of Wells Fargo, but I had Wells Fargo as well. And then Morgan Stanley. And I actually didn't have Goldman Sachs. But Citigroup is the one that stayed, right? And by the way, to answer your question, because I didn't mention Citigroup for no reason. The reason why Citigroup is always trading at below book value is because they generate a lower rate of return on those book assets. So it's actually a justified amount, and they have a lot of riskier assets, or it's considered to be riskier assets. Okay. So I hope I answered that question. There isn't, but the reason why it's a popular, well, actually, I didn't even answer your question. The reason why it's a popular metric is because banks hold assets that are class 1 assets. So in accounting, that just means assets that are easily evaluatable, not in barely any class 3 assets. They have some class 2 assets. Well, actually, you could argue that a lot of them are class 2 assets. It depends on the bank. But for the most part, class A assets, liquid, highly liquid assets, they can sell these loans into the market. Very easy to evaluate them on a given day. So that's why it's very popular, right? Otherwise, you can't price to book. You got to be careful, because if they have if you're looking at a company with class 3 assets, don't. I wouldn't look at price to book. All right. So of course, we want to hear your ideas for stocks to buy in the future. Go ahead and finish your thought. All right. So I'll get to these in a second, but there are some interesting businesses. Don't let me forget. Okay, hold me accountable. All right. So are you invested in? No, I'm not invested in any cryptocurrencies. Yeah, I'm not invested in any cryptocurrencies. I have an exposure to blockchain investments through Overstock, but that's about it. Yeah, that's KLAC is a really interesting business. That's actually one that I can say this. My grandmother's been invested in for quite some time now. She's been doing amazing on that business. I have no exposure to, obviously, because you see my public portfolio. But yeah, wonderful business. Google is basically the same PE as low of the pandemic now. Also, many other opportunities out there. AMD, yep. So AMD has pulled back. I remember I made a video on AMD and it ran up like 50%, right? And I was like, oh, well, I was wrong. I'm just kidding. But I still believed in what I said at the time, and now it's back down. It might be like at the price where I spoke about it, or slightly lower. But no, AMD is definitely interesting. What I will say is I just bought a new PC. It hasn't arrived yet. Which by the way, I can, if anyone's interested in that, I can go over the components of it. But yeah, do you ever use technicals to determine entry like Elliott Wave, or just when you see the price as reasonable? I will use it a little bit to consider, but not really. Okay, I'll be honest, right? And it's mainly bred out of I don't like to. I mean, that might come off across as wrong, but I was going to say I don't like to stare at the charts too long. I like to pick a price that I'm willing to enter, and then that's about it. I don't really care what the market's going to do after the fact. If it goes lower, I'll buy more. That's kind of my mentality, and then I kind of just set it, forget it. Then I go to sleep at night. All right. Hey, have a good night, Spencer. All right. Everything Money makes 30 videos on stocks and still don't learn the basics of the companies. Sort of embarrassing to witness. Uh, sort of embarrassing to witness. Know that they are just about fundamental, but they're just not as well. I think that none of them were stock guys, as far as I understand, and yeah, that is something I have noticed about them, and I don't like to. They're not like. I don't think they're deserving of me talking bad about them like that, but I'd say that they have made some analysis that was quite interesting in terms of some rookie mistakes that I think, in my opinion, were there. All right. Oh yes, yes. Anyone who's studied accounting, yes, class C or class 3, however you want to call it, yes, they can be source of a lot of fraud. No worries, no worries. I can still read through the typos. No worries. All right. So you talk a lot. So you talk about a lot of various sectors of the market. Is there a sector of the market you deem out of the Oh yeah, yeah. So this was a question in the last live stream. So definitely tankers. Yeah, tankers. It would definitely be a sector. I'm not really. Oh, clothing. Oh my gosh, no. I don't understand that. I don't understand consumer trends in clothing for anything. Look what I'm wearing right now, right? My wife basically chooses my clothes. Okay, that's the extent of my knowledge in terms of fashion design, right? I could not care less, and because of that uninterest, I when I look at a company, I'm just like, if it has to do with clothing, I'm just like, I don't know. Like for example, Foot Locker. I have it in the portfolio because it was a fun investment. It was so cheap. The model was just telling me to buy it. Sorry, this is out of focus right now. Let me actually fix that. All right, so uh, the model was just telling me to buy it. And I was like, you know what? Let's blindly follow them out. It's turning out well so far, but I wouldn't know anything about that. No, she did not choose this, Patrick. She did not choose this. No, no. This is the real me. No, I'm kidding. All right. So I think he doesn't buy. Yeah, yeah. I don't buy fashion stocks. Yeah, because you've definitely watched those videos. I do not buy fashion stocks. The one stock that I'd buy in the fashion sector is one that is, I think, the most powerful company in that sector. And that's LVMH. I really want to own that company. Oh my gosh. I mean, that company is so good at convincing wives to buy their products. I'll just say that. I mean, also probably teenage daughters too, but just so much money around the world. Yes, LVMH. Oh my gosh, that company. I really want to own that company. I can't tell you how much I just wake up and then just you typed that before I said it. Yeah, yeah, yeah. So very, very nice. Yeah, LVMH is the one company that I would totally buy. I don't have to understand. I just know that they're just money printing. Okay. Okay, so here's a question. When you analyze and determine a good price for a stock to enter you like, do you put a limit order in for one share at the price to get notified or some kind of alert? I do set alerts. There's plenty of free services that allow alerts. They do email alerts and stuff like that. I will set an alert. I won't buy or put a limit order like that. Actually, I've done that like a couple times, but it's not like a main thing. Oh yeah, Hermes too. Hermes is I forgot what's the company is. I think, is it called Hermes? Like the holding company? Is it Hermes? I forget. Too many stocks out there in the world, right? Oh, and I see you on Foot Locker. Yeah, yes, I own Foot Locker. Okay, home builders. Yeah. So home builders. So there's an interesting thing about home builders. Home builders look cheap, but remember, in cyclical businesses, this is a cautionary note. Cautionary note. In cyclical businesses, we want to be careful when they look cheap, because that might be the wrong time to buy them. Funnily enough, and then when they look expensive, that's the right time to buy them. So not saying that that's necessarily the case right now, but yeah, it's we are seeing a lot of building going on. Okay, some data shows that there is a lot of building going on because every home builder is like, oh, I got to capitalize on this this demand, right? I got to build. All right. Yeah, you see, Julius Caesar right here just pointed out a free resource. Check out my affiliate link. No, I'm kidding. Yeah, so you can set up alerts, I guess, on Webull. Most brokerages even allow that too. So it's very easy to set up. So, okay, so I guess I'll kind of just finish off some closing thoughts, and then I'll answer any questions too. But regarding the investments, show your ring. Which ring? Which ring, Steve? I have 2 rings on me. I have 2. Any books I recommend? Okay. So books, I think I mentioned in the last live stream, you know, there are some well, it depends what kind of books, economics books, investing books, you know, different kinds of rings. Sorry, not rings, books. Oh, Freudian slip there. um, I need a stake in capital mindset. Yes, yes, yes. I saw your comment. It was hilarious. Absolutely. So I'm I'm gonna set up a VIE, guys, and each share I'm gonna sell it for a IPO listing of $10,000, and no contract. There'll be a contract, sorry, but no time stipulation. I have no idea when I'm gonna pay you guys back. All right. So when buying, right here, when buying stocks, do you look at macro landscape, or is it more about buying when you think something's undervalued? No, I do look at sometimes the macro environment, depending on the business. So, for example, Brazil, it drives like the undertones. Okay, so Brazil, I'm very cautious about Brazil. I see a company that's cheap in Brazil. Immediately, I'm still going to be very cautious about Brazil because different macro environment, different business culture, etc. So, I hope that answers that question. But yeah, basically, yes, it affects the undertones. All right. And also I have to consider my settlement currency. My settlement currency is the US dollar. So I have to, be cognizant of currency risk. Are you investing in Procter and Gamble? I'm guessing. No, I am not. Yeah, if I was, I would make a video on it, but no, I'm not currently. But I'm always watching it. That's another business that, if at the right price, I would love to own it. Follow up on the sector question. Do you try to have a diversified sector portfolio at all times, or follow macro trends and overweight some sectors? Okay, so kind of a multi-part answer to this question, but for the most part, no, I don't try to. I just try to find value. And my version of value is not necessarily traditional value stocks. It could be what some others consider growth stocks. But basically, I try to find value in whatever way possible, and it just so happens that I will just accumulate assets over time that I believe to be of good value, and that's about it. And I don't like to let macro trends drive my investment decisions, but I do consider it here and there, and I will make some plays. So I have some plays, for example, that are counter-cyclical in the portfolio, and they serve as hedges in case things hit the fan, for example. All right, so investing books in particular. So this is the follow-up to that question. So the 100 to 1 is a good one. Securities analysis is another good one. That one's a little bit more advanced, more like a textbook, to be honest. Intelligent Investor is also like a more difficult read. I said that one in the last live stream. I'd save that for a little bit later, but it's also a very good book. If anything, there's plenty of videos I saw on the internet that give like chapter breakdowns and stuff like that. And if you want like economics, there's a whole plethora of them. But Seth Klarman's book, you can find Seth Klarman's book, by the way, on the internet for free. Cough. I didn't tell you that. So, but if you want to buy it, it's very expensive. But if you want to just read it for free, it's out there. All right, 10,000 is too cheap. You're selling yourself short. All right, fine. Each share is tied to Berkshire Hathaway A. So BRKA. There we go. All right. Wall Street Insider commented on your VIE for capital mindset tomorrow. Oh, I mean, I don't know. Yeah, that guy's interesting. Yeah, that guy's an interesting guy. Is there a way to get into the financial sector / analytics without an economics degree? I feel I'm too old to go back to school. There is so many different ways to get into the financial sector. Are you talking about data analytics? Because that's actually important. Do you have data analytics experience? Do you have experience with like Tableau, Alteryx, stuff like that? Or maybe you don't mean exactly like that. You mean analysis, like an analyst role. All right, financial education actually taught me a lot of it. Yeah. So I had this conversation with the subscriber interview. But yeah, there are creators that they might have negative aspects to them, but they are getting a lot of people interested in the market and taking care of their financial future. And then maybe you quote unquote move on from them, right? And then you figure out maybe they're not so right. And there's I forgot what Well, Howard Marks actually says, which is why I think he's really wise. What you want to do is, from every person that comes into your life, you want to take the good and discard the bad. Easier said than done, but with every person, you can find some good, and you can take it and adapt it to your personal style or whatever, and then you discard the bad. And in sense, like, for example, some people get introduced to the market by Robert Kiyosaki, and we all know about Robert Kiyosaki, right? So I've discussed this, for example, on Chris's show, Strongman Personal Finance. But yeah, for the most part, if it gets some people have to read basic information, and then they get interested, and it sparks the bug in their lives, and then it does impact them in a good way. However, some people can get impacted in a very negative way. We have to also be cognizant of that. Okay. Yes. Yeah. Margin of Safety by Seth Klarman. Yeah, these are all really good ones, actually. Really good. Because I'm talking off the cuff. Julius Caesar, yes. Okay, so yes. Oh, you're no problem. Okay, so I have seen it, and I think it's also part of his book Principles, by the way. But yeah, he's right in a lot of sense. I think Ray Dalio's a little bit. He's like in love with China a little bit. He's a little bit in love with China, but I actually think we might be surprised. So we might end up being surprised as to who becomes the next world superpower. I think everyone's betting on China, and sometimes when everyone's betting on something, it's maybe not the right bet, right? So everyone's thinking the obvious answer is China, right? But then that makes me think like the next one's going to be one that we didn't really even think about, right? It's going to totally be North Korea, guys. I'm just kidding. Can you imagine? What was that? There was a video game, Homefront. Homefront becomes a reality. Like they become the world superpower. North Korea just takes over China. That'd be hilarious. That'd be one weird. Yeah, it might be India. I actually like if you forced me to make a pick, I'd say I'd be really compelled to think about India as being a contender. All right, a contender, not like guarantee, but definitely a contender. But yeah, like India has got the population, the demographics, the intellectual capital. They are very friendly with Western nations. They have a lot going for them. In fact, I'd say there's a rampant corruption. There is that, but the laws are a little bit more stable in terms of protecting property rights of Western companies, Western investments. So I think it's a little bit more viable. I'd be more comfortable with a Western company investing in India than I am in China. All right. So my favorite part, I guess, is hearing my own voice. No, I'm kidding. That'd be fun. No, in reality, I think it's kind of like a routine. I like the routine. I like actually finding different companies that I haven't even heard of before at times. Because the subscriber requests really do introduce a lot of different stocks I've never heard of. Of course, I shift through like the micro caps because I want to make a habit of not talking about micro caps on the channel. But for the most part, no, it's mainly again the routine and all the different stocks, which is why I like that having capital mindset kind of focus on these not talked about companies. So I want to have it a mix of companies that no one talks about, companies that I'm interested in, I'm personally buying, and then kind of expanding or sharing different viewpoints on different thought processes of investing. So, and it's a different experience when you are saying out loud and kind of getting your ideas out there than just keeping them to yourselves and just acting on them in secrecy, which is how it was before. Okay. Um, yeah, yeah, blast from the past. Yeah. I mean, they made like an open world version of Homefront after that one. Oh, you think it's going to be Russia? Well, Russia, I've mentioned before. Russia. I mean, let me be clear. Don't conflate this that I predict they would do bad in this war, because I didn't even think this conflict was going to happen. But I have said in the past that Russia's economy is that I think it's smaller than that of Italy. So put that into perspective in terms of the viability of its power. Right? They have nukes, but I did not predict it would have been like this. Okay, let me be very clear. Yes, APPS is definitely on the request list. I saw it the other day. Yep. Okay. So two of you. Okay. So it looks like I'm gonna have to like speed that up because apparently two of you here at the same time are asking for the same one. Yes, they do have poor social and economic institutions. That's all of the problems that they have to resolve. But that's why I say it's a contender. If they can get past, like, okay, so China has something worse. They have the CCP. So, so give or take. By the way, I don't know if you guys know this. It's anecdotal, but I went to high school, and nearly 50% of my graduating class was the children of the CCP. In the United States, I wasn't in China or anything like that. They just loved to send them to this particular school. So it was a really interesting experience. I'm still friends with some of them, but yeah. Oh, investing sucks. How you doing? Go ahead and subscribe to Eric if you guys aren't, by the way, guys. He's a really good channel. He gives you a lot of insight into Canadian companies too. Should I YOLO deep? This is completely financial advice. No, I can't say that because even that someone might edit that, but um, absolutely, investing sucks. Totally. And I'm referring to him by his YouTube channel, so you guys go pay attention to him too. Here he is. His name's Eric, by the way. So. All right. Yes. Yeah. Exactly, Julius. It's exactly right. Ohio and Pennsylvania are the size of the Russian economy. So yes, you guys. All right. So yeah, there we go. Another one. Illinois. So you guys are getting the picture. United States is such a powerhouse, and people really don't think about it sometimes. But if you really stop to think about it, United States is such a powerhouse in the world. It is a time in the world where there is quite literally a single superpower at the moment. Okay. Um, I think if India could take the market share of the world's plastic needs, they'd really improve their chances of being number one. They have high end education. Yeah, of course. Yeah, like that's what I'm saying. There's a lot of potential there. Like, for example, though, I'm not, this is an extreme example. There was a lot of potential in my home country of Venezuela. Like, we were at one point one of the wealthiest countries in Latin America, if not the wealthiest on a per capita basis. We just destroyed our opportunity, right? So the one issue that kind of we got it in our own way. It wasn't anyone's fault. We literally got it in our own way. All right. Uh, what was the scummy company coming up from the requests? Not sure what you mean, Patrick. Be a little. I need a little more clarity on that. But did I say something? I don't remember what I said. I need a refresher. Um, yep. Yep. Yep, exactly. That is something that is similar, but not to the same degree as the VIE structures. Exactly right. That can be reformed though, because again, at the end of the day, they don't have a super centralized authoritarian government, right? So, um, yeah. Hey, have a good night, man. All right. Austin's doing great. He's right now he's suffering the corporate life of a busy season at a public accounting firm. I won't tell you which one because that's private to him. But yeah, he's slaving away. Yeah. Um, yeah, you see, that's what I'm saying. So Japan was supposed to be number one in the 80s. China's supposed to be number one right now, right? So I think I'd probably make the other side of the bet, saying that China's going to just mess up royally, which I do think so. I really do think so. I philosophically believe that centralized systems of authority have a tendency to make big mistakes long term. Okay, there's a lot of propaganda that they do spend that they're like amazing at all their I won't. No, Julius. I won't confirm that. No, but I also won't deny that because I'll let you have imagination on it. You mentioned on a video that the upcoming request was really scummy company. Did I say that? Uh, I don't remember saying that. If I did, I might have misspoken and I just had like a brain fart. There's no scummy company. Um, Oh, no, no, no. That might be like there's a company called BNGO that's coming up that has been requested, but that's not it's not counted as a subscriber request. Those are counted as like case studies. So I separate those away from the subscriber request because I want to give the subscriber request like a serious undertone, and then the some of the ones that I consider to be case studies of you know some a lesson to be learned, right? And those are separate. I think that's probably what I was referring to. Um, yeah, yeah. I'd say history doesn't repeat, but it does rhyme. Is Nvidia in the pipeline? I think the company is well, I just bought a new graphics card, so be very bullish on them. So yeah, just that's the research, guys. I bought a new graphics card. I gave Nvidia money, and Nvidia to the moon. There's only one direction they can go, because if Fabio is buying graphics cards, um, no. But if you have one that is in your opinion, because we want to be clear, this is Bradley Roth's opinion, lawyers out there. If you want to share one that you have an opinion that it may, in some capacity, be one, go ahead, and I'll keep it down on the list. Oh yeah, Gencor was in the subscriber interview video. Yeah, that's a company I'd be very surprised if anyone even knew about it. But that's a really good case study as to a company that looks so cheap, like incredibly cheap, and yet, there's something really deep under there. All right. Yep, I'm a consumer 5 times leverage. All right. Oh, you have a GTX 1080? Yeah, I had one right now, actually. So I just got the 3080 Ti on a good deal, finally. And then, so I mean, we're about to see the 40 series come out. So if you hold out, you'll get it even better. Because maybe supply chains normalize, I think, in 2023. In our original Intel video, that's what we kind of said. And that wasn't coming from me, just like, oh, I'm an analyst, I just know. No, it was coming from the companies. They all said, like, supply chains will kind of normalize in 2023. I love that. My wife's boyfriend's girlfriend. That's too good. And it's Gencor. So Gencor, it's the first one. Gencor, not Glencore. Gencor. GENC is the ticker symbol. And then you can actually take a look at it. Take a look. Okay, so what I'll tell you is, it's a good learning lesson. In fact, when I release the course, the Pay What You Want course, it's going to be in there as a case. Actually, I don't know if I can do that. Yeah, I don't know if I can do that, but I'll basically have it in there with all their numbers and then call it something else, right? I'll tell you that it'll be called something else. And then, but it's a really good case study as to a company that's really cheap for a weird reason, and then try to find out what it is, unless you already saw the interview video and I kind of explain it, but try to find out on your own what it is. And that's a really good exercise to do. But yeah, and just to be clear, because going back to some stocks, yeah, Glencore is the mining company. Yeah, very good. Going back to some stocks, so yeah, it's, for example, PayPal's down to a price that's, I have to take a look at it. I'm going to make another video on PayPal and get that out for you guys. Block, I'm going to make a video on Block, because they compete in some instances. But there's also some companies like, trying to think of them right now. 'Cause, my brain's like, it's really late because I woke up early and I'm working all day. So trying to squeeze out the last bit of energy. Trying to remember, what is that? No. There was a Leggett and Platt's also now at a interesting price. I won't say, I have to again look at it again, but what is the oh, I mean, I saw Zillow, by the way, because Zillow's down a decent amount. I think now I'm down on Zillow. I might add to it. I haven't really thought of it really too much. What else? Oh, yes. Spotify. Spotify is down quite a lot, and I mean, that's a company I'm still like learning. But you can see here, I'm in no rush to buy it. When I mentioned it back in Strongman's live stream, no rush to buy it. I take my time. I'll think about it when I'm ready, and then if I even buy it, I haven't even decided. No, not Adobe. Even though Adobe is a business I do like, Adobe is interesting case study because, and I love to point out these case studies, but yeah, you see, like, that's the thing about PayPal, Patrick, but I'll get to that in a second. The Adobe, they made the switch, and people were skeptical at the time, but they made the switch from one-time payments, or like the licensing, to SaaS, right? And let me tell you that it's kind of, it can be expensive, that SaaS model, but people still they do it, and it was a wonderful decision for them longer term in hindsight. There's a business called Splunk, right? That's going through a similar transition. It will take a little bit to quite understand a little bit about the business and their specific moat, things that they have a right to win with. But they are making the similar switch, and I see that they are going through that similar struggle that Adobe went through. I'm not equating the two businesses. I'm just saying that's a company that I'm going to be taking a look at, and if you guys are interested, also take a look at. But yeah, it's SPLK, Splunk. And again, I haven't made any decision. I still have to look at it. I haven't looked at it. So Patrick, yeah, your DCF showed PayPal $80. I mean, I think I forget. I'll reference the video, right? If my video on PayPal shows what prices I kind of stated, but my issue with PayPal is the risks, because like the competition is fierce. PayPal's margins are really high. They're really high. They have a huge take, which means when you have a huge take, someone's coming for you, right? And right now that's Wise and Stripe. Wise and Stripe. If you combine those two together, you basically have PayPal. Yes, I did cover Curate. Yeah, Curate. Curate. Yeah. I mean, it was cheap for a reason, right? And we also stated that in that video we didn't really like it. So I think we've done we have a decent track record now, I guess, because you guys can all check the track record on all the videos. Again, I'm never going to be the YouTuber that cares about popular opinion about being bullish on a stock, right? Because it'd be really easy to grow if all the videos were just like the hot stocks like Palantir, Tattoo Chef, and all that. But I will grow slowly with a really good, loyal, solid base of investors. That's what I want to build, a community. All right. So I'm perfectly content with just chugging along. And this is a hobby for me. This is fun. Okay. I just can't buy Spotify. Okay. Oh, yes. I love differing opinions. I just can't buy Spotify. Bull case. Why would I change to them to view videos, for example? Music licenses are expensive. Okay, 2. I think that you meant 2 at the end. I know you're typing from your phone. So yeah. Here's the problem with Spotify is those royalties. Those royalties are ugly, man. They're paying those royalties out their rear end, and that's the part of the business I can't really get around. I'm also kind of like looking at Netflix here, because I did talk about Netflix and I did say how Netflix was overvalued back in that video. And then after the video, it popped, right? But then now it's looking good. Now it aged well. Now it aged like fine wine. But I am looking at Netflix again, and I'm going to do probably an update video on Netflix. It'll be the 3rd video on Netflix. No, I haven't. Wait, recent article from Lawrence Summers. That name is familiar, but I know I haven't seen that article about recession probability. No, but I have my own opinion that we are now very high. There's a high probability of a recession. Size of recession, no idea. Just a form of recession. And by the way, the technical definition is 2 quarters of a downtrend, right? Of declining GDP, right? So I don't know what size recession, but I do think we're in for one, because energy prices, commodity prices, it's squeezing the consumer, and that hurts consumption. So that can have that effect. All right. Yeah, recession my ession. I did the noise for you. There you go. Would you teach Lefufu how to do DCF on a live stream? Yeah, it's super easy. DCF is incredibly easy. I mean, okay, so like there's the basics of DCS that you learn in your very first class of finance, right? Very first class. It's in business finance, depending on the university you go to, they could call it something different. But in that very first class, you learn a DCF, right? Very first class, and you get the either financial calculator, or you learn how to do it on Excel. That's the basics, and then from there you can build from there, right? You have the basics, and then you build from there, and then you can optimize your valuation models. But yeah, DCF is extremely easy. It's an NPV function. The basic DCF, it's an NPV function. Just so you know that NPV in Excel, because they are silly when they wrote the code, NPV is a PV, not an NPV. You got to actually subtract out the initial purchase price or whatever. But be careful how you execute that. Okay. Opinion on cybersecurity stocks: CrowdStrike, Zscaler. Oh, Zscaler. That is Jim Cramer's favorite. Every time I turn on CNBC, for some reason, he's talking about Zscaler. He's like going Zscaler or whatever. I can't impersonate him. CrowdStrike's come down a lot. Right, I saw. All right, I haven't done an analysis. What I'll tell you is I'll do an analysis on the cybersecurity crowd. I think the only one I made a video on was Checkpoint, and the Checkpoint was the only one I kind of liked, but it wasn't enough for me to actually buy it. Let me see what Checkpoint stock's at. Yeah, Checkpoint. That's funny. It's the only one that's up. I should have bought it. Yeah, because it was so incredibly undervalued when I was taking a look at it. I would go reference the video. I mean, it's public. That's the beauty about being on YouTube. All the stuff I've ever said is out there. You know, anyone can just check it. Right. I don't have to say, oh, I said this, but no, it's like you literally just go, and I have a catalog of videos on a variety of stocks, and then we can see if it stands the test of time. But yeah, Checkpoint was the only one I ended up liking, and looks like it. I mean, I don't think it outperformed the market, but wait, let me see before I even speak. Yeah, well, from then to now, it has outperformed the market. So it actually did really well. It was very undervalued. And that was the only one I liked at the time. I didn't like CrowdStrike or Zscaler or any of those, but valuation mattered in that instance. Now the story might have changed. I don't know. I have to take a look. Can't imagine my life without Spotify. Apple Music doesn't come. Yeah, I know. You see, that's the thing. Garkin is saying exactly, for example, what my inner circle says. Of course, that's not the answer. Okay, obviously, that's anecdotal. That is anecdotal. I'm aware of that. And yeah, I'd say there's something about Spotify that people just love. Can't really. That's what I call maybe the building of a network effect. That's very powerful. All right. Which private company would you love to own? Of course, you'd be speculative, albeit their financials because they don't disclose. Hmm. Hmm. Private company. A private company. Hmm. I'd probably say, oh, Chick-fil-A, 100% Chick-fil-A. Oh my gosh. No, that's not even a question. Chick-fil-A. Every single time I'll take Chick-fil-A. If you could give me Chick-fil-A shares, oh gosh. Have you seen the lines, right? Have you seen the lines on Chick-fil-A? Just ranting about Chick-fil-A here. All right. I can't imagine, like, if I had any new people coming onto the channel, just me dressing like a complete degenerate might have just turned them off. They're like, what is this guy? And you know what was funny? I was gonna pop this open, but I thought that was gonna be like extra levels of degeneracy. Just coming on here talking about stocks, drinking a Guinness in a sleeveless. That's so funny. I'm laughing at myself, of course. But all right. So thoughts on shorting the market. QQQ SPY is a hedge against recession. I'm not super heavy on cash, unfortunately. So I'm guessing like you're looking to profit from it. Okay, but here's the thing: like leverage, shorting. I mean, it could work. It could work. I mean, that's one way to do it. Puts are another way to do it. But if you do the put strategy, you know who's done really good content on that? Sven Carlin. Sven Carlin's done good content on that. Basically, when you do the put strategy, what you do is you give up a portion of your returns. And how he's describing is essentially what pensions do. Pensions do it to reduce volatility, stuff like that. So when they manage their portfolios, they have different goals, right? So my goal in my personal portfolio is maximize gains, right? A pension portfolio is not necessarily maximize gains; it's to reduce volatility, because at any given time you have people retiring, and you can't afford to just say, oh, it just goes up in the long term, bro, because obviously that's what some people think, in terms of like, why don't pensions just do that? Well, you have to understand, like, let's say next year 100 people retire and then the stock market goes down that year. It's like, then what? They're screwed? No. So the focus of a pension is reducing volatility, and one of the things they do is they're heavily in, they not heavy, but they do puts, and they reduce their potential gains, right? So what are your thoughts on covered calls? Do you run the wheel? Absolutely. Oh my gosh, yes. So I think covered calls are a great way of producing income, and you're in complete control um, over where you sell them, right? Because, for example, I would only sell them when I'm always making a profit. So no matter what happens, I get it. All right. Oh yeah. Okay. So YouTube, you get YouTube Music. No need for Spotify. All right. Well, you know what, Paolo? Thank you for being my customer, because I own Google. Okay. I'm the sole owner of Google, by the way. All those shares, they're not really owned by the Sergey or whatever. It's really me. All right. All right. I'm gonna open this here. So Taking a look. Let's see what else. What else? What else? I've never short anything. Let's see. Whack use cost of debt lower. Please check BHC. Okay, so let me answer one at a time. So I can't live without Playboy. I can't. I don't. You know what? I've actually never seen a Playboy magazine. I'll admit that. I'm not afraid to admit that. As a man, I've never seen one. It's not because my wife. It's literally just never seen one. I just know that they're a company that exists. Okay, never in my life in this country have I seen one. So Chick-fil-A, absolutely, man. I will buy them all day, every day if they were ever public. But unfortunately, they're not, and they probably never will be because that whole agreement that they did. But what is Bucks? I don't know what Bucks is. You got to tell me what Bucks is. And Giga Chad, private company to own. Okay, I'm not aware of that company. Oh yeah, you're have you there's this yogurt company. What's it called? Chris Carlson, I think. Carlson something. It's in Scandinavia. Do you know about that company? Let me know. It's a company I was very interested in when I was doing an analysis on them. In terms of their business model, not their valuation. But all right. What does this mean? Licks, whack use cost of debt. I don't know if that's a question or a statement. All right, please check BHC, VTRS, man. It was really cheap, really cheap. But here's the thing about that. Those companies, they're cheap because they're in a what's known as an ugly business, right? So generics, stuff like that. BHC, I got to tell you, that's one I'm not familiar with. Sometimes there's stocks that I never heard of before. I've never heard of BHC. Or I just can't think of it right now because my brain's just shutting down. So it's probably one that I have heard of. If you say the name. All right, I never short anything. It goes straight into the not worth the risk, and I don't understand this pile from it. Yeah, that's very admirable strategy because I think shorting is very risky because again, you have infinite loss potential, and there's always the put strategy. Put strategy is a mitigated loss potential. However, you do incur timing risk. Timing risk is still a risk. Okay, at the end of the day. Oh, okay. There was a question above. Okay. Oh, it's this one. Sorry, I didn't see your question, Patrick. Opinion on using whack on a DCF. I feel it does not give enough margin safety. Okay, so here's the thing. Here's the big problem with that. When you use whack is typically used for evaluating the project. Okay, the project. What is that typically used? Well, in a business, right? I do see that some YouTubers use whack, for example. I won't name names, right? But this is for you guys, the people who watch Capital Mindset, right? So whack has its uses. And typically it is really good to use because let's think of this logically. Let's break it down, right? Because I think that's very important. What are we saying with whack? We're saying the weighted average cost of capital. Easier to say the words, but what does it really mean? Okay. Well, it's how much does it cost to get the money to do the thing, right? So if I'm looking at it from that perspective, what are some things that I might be thinking about doing, right? Well, the big one is probably I'm in a business, I'm an analyst within the business, and I'm saying, should the business do that thing, right? Whatever it is, the project, right? So if we know that this is the cost of the money to get the money, the average cost of a business, then that would probably be the appropriate discount rate in order to get that, right? So that's the instance in which we can use a whack, right? Whack is good for that. And then, for example, if you start doing like whack, I think for whack for Verizon, don't quote me on this, but a while ago, well, you can quote me on this because it is a while ago. I don't know what it is now, is what I'm trying to say. I don't know what Verizon's whack is right now, but Verizon's whack a while ago was like 4%. Are you telling me you're going to discount it at 4%? Think about that, right? So, okay, so I'm guessing Kramer was it Kramer who talked about these two and was like, these two are super cheap, look at the PE of like 3 blah 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 blah. Yeah, I mean, I'll tell you right now, I think VTRS is pretty cheap. I just haven't gotten around to like really taking a look at it. I think the model says it's like really no actually the model, no, because I plugged that into the model. The model was like didn't like it too much. He didn't like it that much. Yeah. So WAC is also, yes, you'll learn it, for example, in your finance courses, or even your some accounting courses, but you'll use WAC. But again, like WAC in the business world, it's probably used just for projects, just to say, should we do that project or not, right? And it's not used in isolation. That's the other thing. So a lot of metrics, people use them in isolation when they're not meant to be. So like price to sales is one of them. People use that in isolation. That's really not what it's meant for. And then there's a little bit of the nuances added with that. A hypercar manufacturer. Wow, I'm gonna pass that on to my buddy. Let me write down this name, because I will not pronounce that name for the life of me. I can tell you that right now. One of my buddies is a gearhead, and he's always asking, like, what's a publicly traded car? He knows the cars by brand, but he doesn't know if they're public or not. Swedish car manufacturers, they do have a lot of insane world first. Okay, wow. Okay, so I'm going to take a look at them. You might be interested in that. What does that mean, Andrew? I need more specifics. I mean, it's valuation model, but specifically, what do you mean by how does it work? All right, what is a mistake? Oh, what does this make in finance that you learned a lot? Oh, yeah, 100%. Buying too quickly. Buying too quickly. Oh, it's private. It's private. Oh, you got my hopes up. It's private. No. Anyway, oh well, the Porsche is going public, and I like Porsche, so we'll have to see the valuation, but I don't know. But I just like the company, so yeah, definitely is buying too early, just jumping into companies, saying, oh, I like it, boom, 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 buy, and feeling like you needed to buy into that business. And that was usually something that occurred in when I was younger, young rascal, with not low temperament, but yeah, like low patience, I'd say. Yeah, so required rate of return, whack, never discounts enough when I tried it. Yeah, no, it really doesn't. No. Like, really, when you're trying to evaluate a company, it's not what you're supposed to use. I don't know why. My suspicion, guys, this is just between you and me, right? And whoever watches this afterwards, which fortunately might be more people than I would like to know this, right? Because I don't like to bash, but this is, I guess, between you and me, guys. I think that some creators were using whack because we were in an overvalued market, and they knew that their content relied on them being overly bullish most of the time, because that actually is what grows channels more. And so to justify valuations, they began to use a whack. Okay. So, yeah. I love buying at the top. Referring to what company, Billy? Yeah, it's gas stations and travel center. Remember Strongman's hat from last time? He had a success hat on it. I guess that's referring to a company. Which company? Are you talking about Quick Trip by chance? Oh, no, you're saying Strongman's hat from last time. He had a you're telling Buc-ee's. Oh, okay, Buc-ee's. Yes. Well, near me we have something called Wawa. I don't know if anyone here knows Wawa. Comment if you know Wawa. But back where I live, that's what we have here. It's similar to like a racetrack or something, but I guess Buc-ee's is the same thing. Yeah. So I mean, I'll take a look at Buc-ee's. All right. So how does the model calculate free cash flow? How does it arrive at free cash flow margin in the future? Some questions about valuation multiple. Okay. So the valuation multiple side, I guess you're referring to the terminal multiple approach, and the terminal multiple approach is a contested issue, in my opinion, because I think the terminal multiple approach is highly flawed if you are trying to evaluate a business going out into the future for too far, because what you're making in that assumption is that somehow you know what the business will sell for in 10 years. So you see, right then and there, there's a problem. Okay. Terminal growth approach has another issue in that, well, how do you know what the growth rate is going to be? So in essence, how you can fix that is you stay a little more conservative. By the way, I'm going off of just the basics. In how you would determine, for example, free cash flow margin, and just so I pull your question up so everyone can see it. How you determine free cash flow margin is entirely dependent on the more in-depth analysis that you have to do of the business. So I unfortunately don't have that much of a good answer for that in terms of, some algorithm that quickly does. I mean, the model does use like some statistics to determine certain things, but for the most part, a lot of the projections you're going to have to do through analysis of the business. Okay. But free cash flow is calculated the exact same way for the most part. Oh, well, you got to be careful how you do it. So for example, some businesses make it really difficult, right? So some people say, oh, it's simple. It's operating cash flows minus Capex, right? That's the quick and dirty way of doing it. And I think that's how Everything Money does it. The quick and dirty way of doing it is operating cash flow minus Capex, done, right? Well, not so fast, because then you have Capex for growth and Capex that's maintenance Capex, right? And so maintenance Capex is what you really want to actually take away, not the growth Capex. Because if you do that with growth Capex, you're going to punish the wrong kinds of companies. Yes, you will. You're going to punish Amazon, right? You will never invest in Amazon. But yeah, just be careful with that, right? How do you determine growth Capex and maintenance Capex? Because I imagine that's the next question that you'd have. That will be depending on the business. You got to look for that and find out what their number is and then apply that. Okay. So, yes, be careful with that. Okay. Have you done Goodyear? No, I haven't done Goodyear tire. I will do Goodyear tire. So, is Michelin tire public? I would like to know that, but I don't know that off the top of my head. The terminal multiple for my, I use terminal. Oh, okay. I read it wrong. That's why I laughed. I thought you said you put a terminal multiple of 50. I was just like, oh my gosh. Like the terminal multiple approach is interesting for what you see about some of these Tesla analysis videos. They put like, I don't know, like 30, something like that. So yeah. Mm. Um, let me answer this one. Sorry, before I get to yours. Used to get my sandwich. Oh, okay. So you do know about Wawas. Okay. So your question, screw college. All right. So how do you know so much about finance? What degree? What degree? Well, I took degrees. I took a degree in finance and accounting. So I did both. I dual majored, and that qualified immediately for the CPA. So, by the way, that's a cheating way of doing it. You don't have to go get your master's. You can just get dual major. You don't have to dual major in finance and accounting. You just have to have the business credits. But yeah, I know you didn't ask that. I'm just giving you that anyways. And the rest is just work experience, just working and investing on your own. Okay, so can you do a video about PE's industries trade at historically? Yes, but here's the problem with that. Some industries go through what I call industry scarring. So, like the insurance sector is definitely scarred right now because of the great financial crisis and all that. So, your thoughts on Makita stock? Debt-free, decent growth / moat. I will write it down, Makita, and I'll add it to the list. Makita. All right. So, depreciation is a decent, quick, and dirty for calculating maintenance cap. Yes, it is. Yes, it absolutely is. And thank you for sharing that. So for oh my gosh, how come I forgot who asked? Who asked? Oh my gosh, I'm so sorry. I forgot who asked, and I don't want to scroll up because there'll be too many to go through. But yes, depreciation is a quick and dirty way because it's the assumption there is it's taking into account the amount you need for all the equipment that you currently have, and it assumes something like you're going to keep it, right? So yes, that's the quick and dirty way. It's not the exact, but it's a really good way. Would you exit Microsoft if you held it for the last 5 years? Reinvest at a later date. What's the price at? Okay, it's almost at $300. Well, you know what? It really does depend. Does someone need the money now? It's so many different factors depend. That's why it's like that can construe it as financial advice because it's so specific to the person. Like when did you buy? What's your yield on cost? It's probably like just better in many circumstances, it's better just to hold. In some circumstances, it's better just to take the profits. It depends. Then there's the tax implications. I can't do that, right? So 70. Oh yeah, 70 terminal multiple. Yes. Would it be possible to see the raw data grabs, the tool you're built? Yes, no, actually, no. That's exactly what the whole point of the website is. So the website is going to have two parts, right? So it's going to have the evaluation model that's going to be optional, right, for people to utilize or not, or it's going to have the just the data, all the data organized in the capacity for people to use on their own because they want to create their own stuff, right? And it will just aggregate it all in a nice little format, right? So no, you'll be able to see the whole enchilada, right? Yeah, and I think it's going back up to 30 years. So if a company has 30 years of data, it's overkill, yes, but like just why not? Here you go, 30 years. Yes, and this is if for anyone wondering about university stuff, it's 150, right? And yes, it's 30 hours of accounting. So if you do a dual major in accounting and finance, you'll definitely hit those. Little tidbit there. Can't you get around the terminal multiple problem by making different scenarios like low, medium, high projection? Yes, but you're always still making an assumption about what it will sell for at the very end. Terminal multiple approach is good for shorter term projections. Just my thoughts on that. But longer term projections gets a little meh, you know. You could do a scenario analysis and then a sensitivity analysis of the scenario analysis. So you would, create as many scenarios as possible. But in that instance, you probably want to create as many scenarios as possible. You're still always making the assumption. And in mathematics, the more assumption you start to make, the less accurate your model becomes. Rule of thumb. You're pretty good at mac and cheese for a gas. Yeah. Yes, it is. I get the hoagies a lot. Not a lot. I make it sound like I go there every day, but I do like it a lot, especially after a night out. It's late, open late. Yep. So he was referring to the CPA academic requirements for anyone wondering. Oh, okay. What is this? By the way, me, Kevin also does Q&A live streams for course members. I'm in his course, and there's 3K people, and he mostly only answers dumb questions like, should I buy Tesla or Affirm, etc. Well, you know what? You can just tell everyone to come over to my live stream, and I'll do it for free. And I'll answer more kinds of. Well, actually, you know what? Then I'd be careful because it'd be too many questions. And I'd be like, I'd have like a 12-hour live stream trying to get through it all. All right, so let me see. Thank you for the detailed. Okay, so yeah, you're welcome anytime. But okay, so how do I arrive at evaluation in the future? I usually make a range assumption and determine the okay, no, you can still do it. I'm just just be aware of the drawbacks, right? That's all. Like it's not that you're gonna be wrong. You could probably nail down the multiple, right? But just be aware that it's an estimate, right? And as long as you know that, then you'll be fine. You can just create many scenarios, and then why not this? Why not just go with the most conservative one? If it fits with that one, you're fine. That mitigates all possible errors. If you are honest with yourself and you create the most conservative one, and it still says it's a buy, there you go. You'd probably be fine if everything else in your analysis is correct, right? That's the assumption. Have you ever read Good Cheap Stocks? No, I haven't read it. You know what? But I need a book to read, and I'll go ahead and read that one. So where's my pen? Oh, here it is. All right. So writing so many things down from you guys. Who's teaching who? I think you guys are teaching me. Kenneth Jeffrey Marshall. Okay. Ever read Good Stocks Cheap or Good Cheap Stocks? Yeah, Good Stocks Cheap. I'll just write that down. If it's good cheap stocks, then it'll tell me. Okay, so here we go. Here's a question. Any idea why venture capital investors like EBITDA instead of net income or free cash flow? Well, the reason why is because typically EBITDA is also known as operating income. Okay, so they're looking at operating income most of the time because, again, definitely not profitable in a lot of circumstances, and so they want some metric to evaluate these businesses. Or the venture capital firm is looking to acquire the entire business, right? In some instances, and that's the case where I'd actually use EBITDA. EBITDA is used when or it's really good metric to use when you're acquiring the entire business, because when you assimilate that business into you guys are going to share the taxes, right? You're one entity now. So the depreciation and all that's all tax stuff. So we will all handle that all in under one. Who's a computer? Who are you calling a computer? 3K people in a single course members meet Kevin live stream. I can never get me Kevin to answer my questions. Well, don't worry, I'll answer your questions. Come here and I'll answer your questions. Okay, so that's not for me. Like the sound of EBITDA. Yes, EBITDA. That's a good way of putting it. Do you have a price in your mind for OCK where the core business would be too undervalued to not buy? Oh, that's a good question. Probably where it was before, $4, $4 to $2. Right. At that point, I'm just like, all right, this is ridiculous. I'm going to go crazy. If the other fundamentals didn't change, will I receive that price? Probably not. Actually, probably if we were being honest with ourselves, I got to retrace that thought because that doesn't consider the recent improvements they made on that business. So I'd say before it was that price that I just said, now it'd probably be higher. Probably, I'm just guesstimating because I have to actually take a look, but like 20s, 30s, somewhere around there, because they have made a lot of improvements. Okay. I'm just not invested for that. It's funny because meet Kevin, you have to pay to get his course live streams, and he doesn't know anything. And you seem like very knowledgeable, and you are free with only 20 people. Well, that's just how life is sometimes. I mean, because I want to refrain from talking too much bad about people, but the way I'm generating income is not through the courses. So yeah, I do this as a passion project. I mean, I'll be frank with you guys. I am doing a I'm still always going to be doing this stuff, but because it's fun. But I'm going to be doing like a Discord community thing where I can do like Q&As, like more direct when I can hear your voices, right? And it's setting up. So I have a team that's actually developing all the bots in it, and it's getting ready because we do have to police it because Discord's actually kind of crazy. If you guys didn't know that, like if someone says a bad word, we have to actually have a bot that automatically censors the bad word. Otherwise, the whole server could get nuked. So we have to have everything prepared before we start letting people on. And then there's going to be like the general admission, and then a different level of admission. But I'll be upfront with you guys, so you don't have to join the other admission service or whatever. Not even a service, but it's going to be like, I tried to make it like $2 a month, and the bot actually didn't let me. It said it was too cheap. So what I did was I put it at the lowest price possible, and then included a discount if someone pays anything, and it ends up being the $2 a month. Okay, so it's called Good Stocks. Okay, so it is called Good Stocks Cheap. Okay, so there we go. Okay, so I guess thank you. I'll take that as a compliment. I'm the computer. What does being wealthy mean to you? Okay, easy question for me because I thought of this already. If I hadn't thought of it, I'd be thinking and being like staring into the sun or something. The being wealthy to me means to desire something and being able to acquire it. So someone can be wealthy and not have a lot of monetary value because they're content with what they have, and that's all they really want. So then you see, my definition of wealthy is very broadening. Now, societies as a whole can desire certain things, not being able to attain it. Right. And then that means they're not wealthy in that sense. So, for example, I want water at my beck and call. I go downstairs, go to the fridge, I get my water. I'm wealthy in that sense. I desire to enjoy a beer. I desire to go on the internet and speak. I can afford equipment for that. I can get what I desire. Right. I can fulfill my desires. Okay. I think being an actuary is more interesting way to get. Yeah. There's so many different avenues and pathways into finance. It's incredible. People really, you can think outside the box. You can really get in there. All right. JD's margins are a fraction of Baba's. Yeah, because here's the thing. JD, I think, is like trying to be a loss leader, and they're just trying to take market share. As we were already discussing, another subscriber was actually mentioning that how JD is taking market share from Alibaba. I'm not confirming or denying that. I don't know that personally. I'm just saying someone else mentioned it. Please don't grow too much. I'm getting all my questions answered. No worries. I mean, unfortunately, because human restrictions, human restraints. Of course, there will be at times where it will be too many. So I'll always have to create systems to allow me. And also, you got to also keep in mind, I do work still full time. I work like a dog. So this is kind of like my relaxed time. Here. Think of it like I'm here with the boys, right? We're just here chatting. Will it cost hundreds of yes, it will cost hundreds of thousands of dollars because, again, the mission of Capital Mindset is to grift off. No, I'm kidding. So no. So like, if you have any questions about what it is exactly, I can answer all that. Fully transparent. So I did actuary stuff for a couple years in college. The financial math exam really preps. Yeah. I could totally see that. With getting into like a hedge fund or anything like that, it's mainly the passing the interview process, because they always try to weed out for specific mindsets. But yeah. Yeah. So yes, it will cost hundred thousands for that. Yep. It will get more difficult. I will always try my best, but it will get more difficult. That's that's fun. That's actually the PC that's coming in. It has a i9 12th generation i9 and a 3080 Ti. Um, but it was on a really good sale. So I actually I got it from this. What's the I forgot the name of the website, but I got it. They were having this sale. It was crazy. I was like, what the heck? That's insane. So I would always go on there to check the prices, and they were doing a sale for, I don't know if it was just like a split moment, but they were selling the TIs for the same price as the regulars. So the 3070 Ti was selling for the same as a 3070, and a 3080 Ti was selling a 3080. And I was like, what? No, buying. They secured me as a customer immediately when I saw that. Okay, so imagine asking wealthy question to Brooke. Oh, oh yeah, it's that guy. That guy. He's the guy who always comes on. And for those of you who don't know, so I go on a live stream on Strongman Personal Finance's channel, which go ahead and subscribe to him. I go there on every Sunday. We have a discussion, like a panel discussion, and we always get some interesting folks coming in and trying to say stuff. And this individual who Julius is just talking about, he always comes in and says, "Oh, you guys are poor. Oh, I'm richer than you." Like, it's the funniest stuff. And it's this guy apparently from New York. He's a funny character. It's like a movie character. LV, so what I do for a day job, well, you're saying like a day job, like I have a night job too. I am Fabio by day and I'm Nighthawk by night. So what I do for a day job is I work right now, and actually that's changing a little bit, but I work right now for a firm that I can't say, I won't say the name for the firm because I don't have permission to talk about them directly like that. But I work for a firm that has a main business, but I work in their portfolio arm, essentially. And then, so in that arm of their company, they decided that they want to invest excess working capital into different forms of investment. And so I'm part of a team. I'm not the leader or anything like that. I'm too young for that. But I'm lucky enough to be working in that team and learning, because I am still quite young, so I'm still learning. And yeah, we just look for different investment opportunities, typically more in the private. Stocks is a part of it, but it's not like the main focus. Okay. All right. So, I looked at starting like an ETF for myself, and it's like 100,000 to just get all the paperwork done. But I'd probably like to start one because it'd be a very tax advantageous way to invest, right? For myself personally, and then if anyone wanted to, whatever. I'll make the expense ratio like 50%. Sue me, bro. I'm kidding. Can you imagine? Mm. Yeah. Oh, yeah. Tomorrow's a Fed hike. Oh my God. They've been saying this since November, guys. Yeah. They've been saying this since November. So we'll see. We will see. I have already been talking plenty, your ears off about liquidity crunches and all that jazz. So we will see if they actually do it with all the uncertainty. I heard some people saying they're not going to do it. Who knows, right? I only cared about the sentiment, and I sold the REITs. That's one instance or an example in which I did sell an asset class based on potential sentiment, and I think so far it was a right move. We'll see about tomorrow. But yes, that's my thoughts so far. It's not really like a direct answer. Disgusting sandwich. Geez. I'm not really. Oh, I mean, like we're saying, like everything's in it. I don't know. To be honest, I'm pretty vanilla. Like a pub sub, like crazy stuff, like just the chicken buffalo. Like, yeah, I don't know what you mean by disgusting sandwich. Some people might think that's not appetizing. I don't know. I love it. Like the chicken tenders, and it's very filling and very fattening. Works for a firm or a firm. There are clues. I love that. There are clues. Yeah, it's the Da Vinci Code here. Follow the statues, just pointing. No, actually, these shapes back here, they're assembled in a way, and it's actually, if you can see here, it's an arrow. It's pointing over here, and there's something there that is the next Amazon, right? But that's you got to find out where that is, right? Oh, I pointed in the wrong direction. It's this way. That was pretty. That was a fail. That was a huge fail. I was pointing over here. All right, so strongman beat me up at Walmart after. Yeah, did he take a picture of you though? That's very important. If he took a picture of you, that was research. You can't take that personally. Ticker symbol Ruru. Oh my gosh, that would be so good. Can you imagine? Imagine on CNBC. They turn it on, and it was like, there's this new ETF. It just started trading, and this guy, he seems to be a jokester. Blah blah blah. And they would talk so much. They'd be like, "What is Ruru?" I think they might conflate it with me making fun of people with, mental disabilities, right? I think I'd get in a lot of trouble for that. We'd be canceled immediately, like day one. Does management compensation deter you from an investment? I want to invest in Disca, but just read, and I could be wrong, that the CEO sextupled his salary from last year or something. Yeah. Okay. So I know that the Discovery guy, he's pretty egregious when it comes to compensation. It's similar to Activision CEO. I mean, I bought Activision. I bought Activision, made a video on it, then sold Activision, made a video on it. So it's not like I sold it, behind closed doors. Just want to be clear because I know some people might be new or not. But yeah, it's not the killer of a stock or a potential investment, but it's something I will consider. I'll be like, man, why are you paying yourself so much, man? So I'll consider it, but it's not something that's a turn off, right? Yep, Johnson & Johnson, because they'll heal his wounds after he's beaten up. Would love to see a review on the article. You know what? Let's add that to the list. That's not a stock request video. That will be like a conceptual video. I can probably get that out tomorrow if I have the time. Lauren Summers, and then I'll read her article, and I'll take notes and give my perspective on if she's right, wrong, sort of right, sort of wrong. If you actually did, man, I don't know. Well, how much are they paying you? If they're paying you a lot, go for it. And then what you do is you like sneak in, like some information, like, just totally like off the books, not condoning anything, SEC. I'm not saying anything. That's you're just misinterpreting what I said. If you could add one line item disclosing anything you want to every company's financial statement, what would you pick? Damn, I haven't put much thought into that, Paulo. I'd probably say, maybe something about goodwill. To be honest, like how much of that goodwill estimation is their estimation, or what it's not really a line item. I just want to know exactly how they calculated goodwill, exactly, precisely, every detail. It's not really a line item because sometimes goodwill, for the accountants out there, goodwill has the highest propensity for fraud. Not that it guarantees fraud, but it has the highest propensity for fraud to exist within that line item. So yeah. All right. Oh, Starbucks. I mean, Starbucks has come down, right? Starbucks is coming down because of that China stuff, shenanigans. Yeah, $83. Yeah, but it's up 4% today. No, but it's down. What is this? Like, yeah, 31%. I think Starbucks is kind of overvalued still, but same with Walmart. Walmart, Starbucks overvalued. Walmart, I assume it's kind of, without me looking, I'm going to look right now. It's been stable-ish. Yeah. Okay. It has been stable. And the reason why, and I'll kind of actually say that because that's a kind of a case that I can do with live with you guys. So Walmart makes sense that it's more or less stable because of all the pricing fears, right? It's a company that can charge people quite literally more, right? It's easier for them to do that. It's easier for them to pass that on. Something like Starbucks it's going to be a little slower, a little more drawn out. However, they are doing it. I just went to Starbucks with a friend of mine, yesterday, and it was a bit more expensive. I think he paid $4 for a double shot of espresso, something like that. I don't drink coffee at Starbucks. I have my own. I bought it. I bought a machine, so it's a an actual like proper machine. So I make my own espressos at home. But yeah, if you guys can, I would do that. Yeah, but I'd say Starbucks because every time I go to Starbucks, you look at that line. Here's the research, guys. I just film. I go by all the cars, all the women in the cars. They just look at me, and I'm just like walking by. I'm just filming them. Totally not creepy at all. I just like look to see what drink they have. Just look in their car. They're just trying to drink their drink, and I take notes of if they got the eggs because you guys know Vital Farms. Oh my gosh. With these 21 people watching, let's actually pump Vital Farms. No, I'm kidding. But Vital Farms is I'm surprised he's not talking about this one. You guys know who I'm talking about. But Vital Farms is it's a very small company, and it sells these like eggs that you can watch a recording of all the chickens, right? That the eggs come from. They're supposed to be like very humane. Like I totally support that and all that. And I do. My wife buys their eggs here and there, but they are very expensive in comparison to regular eggs. So it is like a bougie, unnecessary expense, right? You can just buy regular eggs. And I think Starbucks has a partnership with them, so their eggs come from there. So that's some market research. Who's your favorite investor? Again, I'd say the cop-out answer is Warren Buffett, but I'd probably say Howard Marks. Howard Marks I love his philosophies. Oh my gosh, I absolutely love his philosophies in terms of how he thinks of the market and stuff like that. Hey, Noam, how you doing? What are you doing up, Noam? All right. Did you get the skew for the avocado toast with cage? Yeah, no, 100%. That is absolutely. Investing channel did a video. Invested channel did a video on T Rowe price good. Looks really good. Have you checked it out? What channel is that? Also, I've been getting requests. I'm still gonna get to it. The Joseph Carlson show. I'm gonna review his portfolio because I know I got that request. I think it was from you, Julius, if I'm not mistaken. And our studio. Oh, you're doing analytics. Yeah. You got to code R. You got to learn how to code. Yeah, Noam. Learn how to code, Noam, and then come back. But the um I'm going to review his portfolio because it's the story fund or whatever, and I mistakenly said he outperformed the market in a live stream. I corrected myself, but I actually had to correct my incorrect correction because he actually did underperform the market when I took a look at the M1 Finance, because I didn't know M1 Finance, when it shows someone the portfolio, it aggregates the what if scenario if you had been invested in all of that. No, I'm also after I'm off here, I'll send you the data, and that should help you out. All right. So when you analyze Corsair, you called them a glorified drop shipper. I might have been harsh there. Okay. I think I understand what you mean, but how is this, for example, Nike or Apple different? They outsource production. All right. Well, the thing is, Nike is the brand, right? And I get what you're saying there. They're the brand, like the outsource production of the shoe. Why can't the others just sell the shoe? But the brand power is so much more, right? We can compare, like, if Corsair becomes that powerful in terms of brand, it's a different story. It's just I don't own Nike, but would I like to? Is there value behind the brand? Yeah, absolutely. The brand is extremely valuable. Corsair is just not there yet. Like, for example, here, I'll let me get this real quick. So I bought this recently. This is completely unprofessional that I'm showing this, but I was actually in between a Corsair keyboard, and I instead got this one right here. I haven't opened it yet because I'm waiting for the rest of the computer to show up. We should do an unboxing video. Just turn this into an ASMR keyboard unboxing video. But this is Razer, and I was looking generously between the reviews between the Corsair product variant and the Razer variant, and I ended up going with them. But Corsair was this, if not the second best, right? recommended. And by the way, I currently use a Corsair keyboard, and it's lasted me 6 years. So I can't complain about that. Austin, my ex co-host, he had a negative experience with Corsair. So that's what I'd have to say about that. Corsair is kind of like a hit or miss in that sense. Okay. But as far as the rest of it, yeah, Apple's different because they're very different because they control the software. So that's an easier one to actually dispel that they're the same. Apple controls the software. Corsair doesn't necessarily control the software. And when I say the software, it's akin to controlling Windows. Microsoft is that. Okay. Finance movie. Obviously, Margin Call or The Big Short. Really vanilla, if I'm being honest. Don't really watch those kinds of movies too much. When I watch movies, I look to escape. In professional work, do you usually use fundamentals or shenanigans like Buffett indicator, crazy volatility graph? No, yeah, it's fundamentals. I'm mostly strictly fundamentals, occasionally using different indicators. Buffett indicators and stuff like that, those are fun. I look at them for fun. How about, like, that's literally it. Invested. Okay, the channel is called Invested. Okay, and I will look at them and what they say. I'm not going to consider that like, oh, you want me to look at their portfolio, anything like that. I am just letting you know, for whoever requested Joseph Carlson, I'm getting on that. I'll do that soon. Let's see here. Right here, YouTube saying randomly that the market has already priced in 1 to 3 rate hikes. Thoughts on that? And that historically, the first rate hike has seen a sell-off, but the second, third one followed by rallies. Yeah, I think that each time we enter like a new moment in history, it could be different. It obviously could. We'll see if, I don't know. I'm always surprised because you would think the rate hikes would have been expected in November when the Fed's saying like, hey, we're raising rate hikes. We're raising rates, right? And remember, if you take the Snyder pill, and if you take the Snyder pill, you learn that it doesn't matter. It's all a psychological game in reality. But if you don't take the Snyder pill and you say, okay, the rate hikes affect rates directly, like quite literally directly, then yeah, you could think about that, right? I'd say I'd focus more on the fundamentals. I don't really pay too much attention. It's almost like Buffett believes that too, by the way, the whole Schneider thing, because he literally says, "Oh, I don't care what the Fed does." It's like, why would he say that like that? I'm not saying that he believes that. I mean, right now, and like again, the point of this live stream was to answer any questions you guys had about Baba and hopefully dispel some misunderstandings that maybe I didn't do enough of a job in the video. But it's easy to kick a stock when it's down. That's what I did say that in the video. So I'm not going to talk anymore about the VIEs. I'll just reference those videos if anything, but I don't want to do that. Yeah, for Razer, I also got I got a mouse, very high quality. It was either them or Logitech, but they have some good keyboards too, Logitech. Start your own gaming with Fabio YouTube once your new computer is up and running. Yeah, but the new YouTube wasn't intended for gaming. I could do that though, I guess. It's because it renders. Videos can render. I can render a lot more kinds of data. I can have more screens around. So that's why I got more powerful computer. But yeah, I could definitely do that. That'd be kind of funny. I know there are some channels that talk politics and play video games. It'd be funny to just talk stocks and play video games. I trade places with Eddie Murphy. Yeah. Okay. The channel Invested is good for mentality, but too bullish on growth, usually, in my opinion. Okay, so can you actually go a little bit deeper into what you mean by mentality, right? Are they, just a hype beast kind of channel, or yeah, explain that a little bit. I'm just curious. What is Baba's accountability position about? What are you accountable for? I don't know what you mean by that question. Can you rephrase that question? I can definitely answer you. I was very good at math. Math was one of my strong suits. And the standardized testing, I scored very well. And that was actually my main focus of tutoring when I had my tutoring business. It was specifically mostly in math. Almost all my students were math related. So that did, of course, help in finance. Ah, that makes sense. Okay, that makes sense. And Greystone computers are very expensive. I mean, I'll I'll say like right now, I mean, because we have the supply chain. Again, you look a lot of the inflation, the price inflation, because let's define inflation by prices for a moment, because I know it's the old and technical definition is expansion of the money supply, but the price inflation or prices rising has a lot to do with these supply chains, man. If you really see like how, for example, semiconductors aren't everything, everyone already knew that, right? But then like now when we actually apply it, people are forgetting a little bit about that. And then of course you have this war and all that. People. I was saying this back in the pandemic. Of course, I wasn't making YouTube videos back then. I should have, because then I could have had this like recorded out there. I was saying this, that all of these lockdowns are going to show up later down the line, right? And then here we are. These are all the effects, right? And yes. Oh, oh, that's what that meant. Okay, thank you. So, yes, so now I can understand this question. So, what is Baba accountability position about? What are you accountable for? Okay, so the point was, right, I would add a position to Alibaba and Tencent so that in the future, should I ever, speak about them in a negative manner, some people might construe it because, this is the internet. People can screw anything for anything. That I'm relishing in their suffering, right? So I took a position to say, okay, I'm not doing it for that reason. In fact, I'll just suffer alongside you. I'm doing it because that's what I believe to be the truth. And I'm just going to espouse what I believe to be the truth, in that Alibaba fundamentally is very dangerous. Okay. And so that's basically it. Of course, I'm responsible for myself too. I'm not going to put 50% of my portfolio and be like, "Oh, I'm accountable. Oh, I'll suffer alongside." No, because that would be a masochist. Like I just enjoy my own suffering. But and plus, I wouldn't be able to sleep at night because it's kind of like if you know or believe something, and then you like if you believe that walking outside will kill you, will you walk outside? Probably not, right? So that's a weird analogy or weird comparison, but hope it works. Um, okay, average Joe, sure thing. I'll add that to the list. Average Joe. Okay, average. Any comments on it? Average Joe investing. Is it cringe? Is it good? I don't know anything about that channel, so it'll literally be like a raw view of this guy. I have no idea. Um, how long I've been investing for? Let's say about like for myself about like 8 or 9 years. I'm losing track of time because of COVID. COVID's making me lose track of time, but like 8 years, I think 8 or 9 years. Um, but definitely losing track because of COVID. It almost feels like 2020 and like now is all 1 year. So, but it's really been like 3 years, man. Jeez, that's crazy. All right. What is your best Oh, I don't even use Twitter. I don't use Twitter. If you notice, for example, Capital Mindset's social media, I don't even really go on my own personal social media. I just stay on like the Capital Mindset social medias, and it goes to show you how little I am on social media because there's no tweets from Capital Mindset. There's like nothing. That one tweet that came out, that was Austin. That wasn't even me. And then the Instagram, I'm doing a conscious effort to actually post things here and there. And then TikTok, I'm just like completely lazy. We had that guy who was being the impersonator, which was hilarious. And I still haven't posted anything. But TikTok actually, I think TikTok removed him, which was awesome because we did submit the request for TikTok. So I got to actually wait 30 days before I can uh, uh, um, make sure I can claim the name completely. But TikTok's on my side on that. I already got the message from that. Okay, so what's this? By mentally, I mean staying long, not focusing on volatility. Okay, so we all need that. We all need like pumpers, I guess, not like pump and dump, but like pumpers, like they keep you motivated. So I hope like in some sense I want to espouse that too, because things have been going down and some channels are making content like panic and I mean I know if I start doing that, I'll get more views, right? But for the most part, you can see I just like sometimes don't even mention that the market went down. I just make a stock request video from you guys, and I just don't even like do a video saying, "Oh, the stock market went down." It's like, 'cause who cares? But I know, like, let me know if I should start doing them just for as an inside joke between us. I just don't. I just would cringe at myself doing that. What is your average annual return last 5 years from the public equity investments? Okay, so I think, well, depending on what account I look at, but I'd have to average out between the accounts because I have different brokerages, but I think it's like, it's been really good years. Okay, so I want to be very clear. So I could very well underperform in the future, but it was like 30, 34. It's probably 40%. Maybe there's one account that's going to bring that down. My Charles Schwab might bring that down right now. But no, it's been crazy years. So I actually don't like to say the last 5 years are a good example of what will happen in the future. So I'll say, let's see what happens in the next 5 years. That's going to be a bigger test, not last 5 years. Last 5 years, not that really crazy. Really, like, for example, you just held Nvidia or something. You're just insane. And then you're like, oh, I'm a genius. I had Nvidia. But it's like, no. So I'd say, like, let's look at the next 5 years. Okay. The average Joe investor chases dividends growth. And by the way, that's not an exact amount. Okay. So I don't know the exact amount off the top of my head. The average Joe investor chases dividends growth. His portfolio is kind of cringe, in my opinion. Okay. So I'll take note that it is cringe. But I don't know it at all. So we'll see. But it's chases dividend. Oh, okay. So he's like a strict dividend investor, I'm guessing, or some sort of that, which is fine. I mean, that's a valid strategy. Whatever strategy keeps you invested in the market is fine. You may underperform, but if it makes you feel comfortable with what you own, I'm all for that. Actually, okay. So, oh, what's this one? I actually have the same opinion, but for everything money. They are good at the buy cheap stuff, don't panic sell, etc. But I don't take their price forecasts. Okay, so yeah, like, I'd say when I saw some of their analysis videos, because they were sent to me to, like, just look at them, and I did a review of Paul's portfolio. I didn't exactly like some of their analysis. I think some of their analysis is rudimentary or basic. I think one of them, I think Paul actually owned something to do with Carnival, I was told, back in the day. I don't know if he talks about it now, but he did own Carnival, and Carnival was kind of a speculation that it would recover. And I understand the thesis behind it, but the ones I have the real problem with is like Smith and Wesson. Like, what the heck, man? That's insane. Very, very easy to catch that's a mistake. All right. All right, let's take a look at this. Take a look at statements at the 8 pillars is initial step, but analysis just, yeah. It is. It kind of is. So what they're doing is essentially, yes, it is a stock screener. It is a stock screener. I'll say it. I'll admit it. It's a stock screener. Anyone can set up the 8 pillars. You literally can do that in your Excel. No skill required. Were your investments mostly small, medium, or high cap companies in the last 5 years? A mix of many. So yeah, that's a cop out. So not really many micro caps. Like, for example, some of the very successful ones I had were like Spotify. You see, like, that's some of the things I would driving. Mercado Libre, Google right now is the biggest one in the portfolio. I haven't sold it since finalizing the accumulation back in the day. I trimmed Amazon. Right now I have about, I think it's like close to $100 in non-realized gains that I still have to realize right now in the portfolio. And some of those positions are, 2 years old, 1 year old. Some of them are 3 years old. Google, I think, is one of the older ones. So the ones that pretty much were pandemic buys, the only one that's still there is Unum. All the banks are gone. Like I said, oh no, except for Citigroup. Citigroup's still in there. And well, I don't call that pandemic. When I say pandemic, I mean like the March-ish ones, because I know the pandemic lasted longer than that. So like oil stocks are from the oil trade. They're still in there. So yeah, it's a mix. It literally is. I just look for things I like and I buy. Sometimes I'm more heavy cash than other times. Oh, this is probably going to bring down that percentage if we take into consideration the total allocation to cash and assimilate that. But I hold cash for various reasons, like for example, real estate expenses, stuff like that, because investing in real estate, stuff like that. So I kind of just consider the portfolio kind of more or less in isolation. But definitely if I consider like what I would consider the cash portion just for stocks, it might lower that percentage I told you. I'm just talking about what the brokerages say. Okay. What period in the market was the most difficult for you and why? Ooh. Oh, you know what? Like when the most difficult times are kind of like recently, 2021 was harder to find things that I was comfortable with buying. That's what I mean by difficult. And oftentimes I'll say this: you might find one or two good ideas a year, and other than that, you're just sitting on your butt and just like, I don't know, waiting. And then you're just looking and hunting. That's most of the time. And that's actually a good, sustainable way, in my opinion, that the average person can kind of invest. If you think about it in that way, if you're only looking for one or two deals a year, it takes away, and that's what Buffett's trying to tell you, by the way, with the punch card investing idea. What he's trying to instill in the average person is the idea that you want to take a chill pill. And that was going back to a question one of you guys asked. What was one of the greatest lessons I learned was patience. Patience in the market is very important, but it's patience to buy, right? It's not patience like, oh, I'm waiting for the gains, bro. No, it's patience to like get into a stock, right? Because there's always going to be these ideas thrown at you, a lot of ideas, a lot of stories, and it's like it's easy to quote Buffett, but then like not listen to Buffett, right? And he's trying to tell you patience in a lot of his lessons, and like not swinging at every pitch, right? All these little lessons he's always telling you. So yeah, that's what I'd say. It's like when the market is very overvalued, it's hard because you can't find anything, and that sucks. But when things like this happen, I get excited. You know, are we done? I don't know, but I'll just look for things I like. I'm buying Facebook. Facebook could keep going down, but I'm still going to be buying some Facebook, right? I don't buy all that I want to buy all at once, right? That's another thing. Strategizing. How long is your list of companies to research? I hear you saying I'll add that. It's very long, Samuel. It's very long. um, yeah, it's very long. I think I count it. I have a counter on it, and it's like 80. I think it's 80 individual companies, not requests. Individual companies. Yeah, it's a decent chunk. I'll say that. All right. Okay, so Manual Finance quotes investors like Buffett and Lynch, but invests in TTCF and HIMS. And okay, Manual Finance. Julius. Do you like scour the internet? How do you know all these YouTube channels? How do you find these people? This is another channel, Emmanuel Finance. Oh gosh, Open Door is a really funny business model. I have no idea what the heck the I remember when people were excited about it in the SPAC era. I was like, what is this? This is like when I looked at Zillow and Zillow was doing what Open Door was doing. I was like, I hated Zillow, and now I own Zillow because they got out of it, right? And it's a speculation, by the way, but it's a speculative bet on them potentially reaching the potential that they might achieve. I say that. And Tattooed Chef, I do not understand Tattooed Chefs. I have some subscribers that were early on, that when I made the Tattooed Chef video, and I think it was like at 20 something dollars a share. You can go back. It's like one of the OG videos. I think of the fair value I said was like $2, right? And that subscriber did. They're now been a long time subscriber, I can say, from one of the original subscribers, and they did not like it at the time, but I think they opened up to it. They gave me a chance, so to speak. Okay. Shouldn't you be managing Roman politics? Oh, you're talking about Julius Caesar. Yeah, it's fine. I thought it was towards me. I was like, I don't understand that at all. What is, in your opinion, the most undervalued asset class right now? Stocks, precious metals, different commodities, bonds, and so on. As a whole, okay. Bonds in general look overvalued because where yields are. However, if there is a low growth environment in the future where things are going to get a little testy, then they're actually undervalued. They're pretty undervalued, right? Because there's a lot of leverage in the system. People are betting on a lot of monetary inflation happening, but that's if that scenario occurs. In general, you'll find always undervalued stocks and precious metals in different commodities. Oh, commodities. I don't know, man. Commodities has to be like supply chain normalization. If they don't normalize, things are going to get a little bit rough. So yeah. Is there a way to join your team to help with analysis for free and for fun? Not going to say that I will join, but some people might. I mean, look. Well, the thing is, I'm technically leaving the company. I'm going to another company. So if that's what you're referring to, but otherwise, like I don't know. In the future, maybe I end up doing something with some other people, and we form a partnership. Like an LP or some sort with specialized people. We never know. Things can happen. Most definitely. Sometimes YouTube is a really good way to, you create this brand to reach a lot of people, and you don't know who you're reaching. You could be reaching very highly skilled individuals. So, what are some upcoming tickers you're going to cover? Loved your video. Okay, thank you, Samuel. Let me see. I'll just pull up the list. So right here, I have on the request list. Okay. So in terms of case studies, I have BNGO that I'm actually formulating. I have a video regarding review portfolios on Joseph Carlson and Robert Reynolds. I have Affirm. Affirm's actually supposed to be next on the list. I actually probably should push this one up because of time pertinence. BHP, Rio Tinto, and Vale. That one should probably be pushed up. I have a Tupperware versus Newell. I already actually did this one, so I have to X that out. And let me see here. I already did this one too. I forgot to X these out because I already did them. So good thing you guys made me come here. I already did Barry. Coupa Software. I'm actually going to push that up because of the timing. And so, yeah, that's a couple that you should be looking out for. But yeah, I hope that answered your question. Brutus did kill you. Guinness from a can? That's flat. Yeah. I have the glasses downstairs. I'm too lazy. I just have the Guinness. Yeah. It's okay. It's not like terrible. I know it's not the way you're supposed to drink it, but okay, so he's not bad at investing. That he had to sell a suit and start drinking. Yeah, that's why again I'm in this degenerate outfit, in shorts, sandals, and drinking from a can in my house. Yeah, that's funny. Oh, okay, casino stocks. Oh, by the way, Paolo, as far as everyone knows, this is the very first time I've ever been on camera with like a sleeveless like this. I usually like to make sure, but this is an impromptu video that I just randomly did. We're already past the 2-hour mark. I don't really care as long as you guys keep asking questions. I don't really mind. What am I gonna do? Sleep? That's for chumps. I'll do this as soon as I'm done with the beer. I'll head out. So. Have you looked at any casino stocks, MGM and Caesars? No, I haven't, but I'll say this. I am concerned, for example, well, actually, no. Here's this. Las Vegas Sands looks like they're selling off because of the whole China debacle, because they're an American company, but they're basically a Chinese company. Now, you got to be careful because of the capital restriction and all that, but they can always bribe the local officials because it seems like they're kind of dominating in that sense, right? So, and I say bribe as if like, oh, but it's part of the course in Macau. You do have to, pay up some money to some officials, a lot of corruption. But with regarding, and I'm saying also Wynn Resorts in that, by the way. So I'd be cautious about the capital restrictions route. But for example, like MGM and Caesars, what I do like about that industry is the real estate. So Vici Properties is one I actually do enjoy. I haven't owned Vici Properties, but I'm watching it. So when I enter or re-enter REITs, the ones I'm looking at, and I'll say this here, I'm looking at Vici Properties and MPW for different reasons. Okay, so hopefully that answered that question. Favorite travel destination right now in the present moment of this world? Definitely, it's been Europe, to be honest. Just different parts of Spain, different parts of France, the south of France. I like the south of France a lot. Visiting, I need to go visit actually my family. I have distant relatives in Italy. Should go visit them. Latin America, I might be going to Brazil soon. My wife loves Brazil, obviously. She's Brazilian, so. And in the United States or domestically, I gotta say, Florida's pretty cool. I've been to California once, or no, twice. I've been to California twice in my whole life. So it's whatever. Why not commodities? Commodities are very difficult. Commodities are difficult. So I like to stick with the commodities I think I have a grasp on, which is, for example, for me, I think I could have a grasp on oil, right? I was able to kind of piece together the whole President Biden doing certain things, or at least driving sentiment that would have caused prices to go up, which is why I invest in oil. So I think I have a somewhat good understanding of what events can cause it. Like right now, I think we're in the cyclical, we're in the upside, we're closer to the upside than the downside. So I'm trimming it off. I'm selling. Okay, so I'll write that down, Patrick. Embracer. Okay. Embracer, and then thoughts on Venezuela's oil. Okay, but let me write this one down before I get to that. I just saw my eye went right to Venezuela. You know how to get my attention right there. Evo AB in Sweden. If you want to invest in gambling, then you get. Okay, so it's a gambling stock. Okay, got that one. Okay, Venezuelan oil. So the thing with Venezuelan oil is it needs to be processed a lot. Okay, so the break-even point for Venezuelan oil is actually a lot higher. I saw the United States is working with an agreement with Venezuela because of the whole Russia debacle, which I think is unfortunate because that's going to help prop up the regime over there. And no Venezuelan is fond of the regime currently in Venezuela, but whatever, life is life. International politics are international politics. And it might help the government, but I don't think that's a good thing, because it's not going to go. It's like they're a socialist dictatorship, but it's not going to go to the people, because when does it ever? So because that's what the government always claims, but obviously no. And that's a little bit about Venezuelan politics. So the current price of oil is at the point where they can be profitable. Of course, almost everyone is, but yeah, that's pretty much it for the most part. What are the sectors that you will absolutely avoid investing in? Also, I don't have any ESG criteria. I mean, except for governance, environmental and social. I don't really pay too much attention to it because for the most part, they're kind of just fluff, patting on the back measures. Governance is important though. Governance, for example, the VIEs, right? Like we're talking about today. And if you take a look at the Council of Institutional Investors, they have written extensively about the issues with VIEs and governance risks. Okay, that's a good place to go look for that. But yeah, sectors, I talked about it a little bit briefly already. So I avoid, for example, oil tankers. I avoid most MLPs. I avoid retail, like retail regarding selling clothes and stuff. Don't understand it. Microsoft, fantastic business. Is it overvalued? Depending on what you're comparing it to, depending on what the economy really does. Because as a business, it might be like a flight to safety of sorts. It's not something I would buy now, me personally, but that's just me. What do you think the best? Yeah, definitely Rockefeller. Are you kidding me? The guy, like, I don't know what percent of the GDP he amassed. The guy was insane. Yeah, built crazy legacy. Yeah, Chavez was pretty much Chinese. He gave up a lot of our country to the Chinese. And that's for Paolo. And then Foot Locker. Yeah, exactly like Foot Locker. But Foot Locker, I said in the video, I bought it because just for fun, and it's turning out really well. I haven't actually checked the price. Let me check what Foot Locker's at. blocker today. Yeah, if I sold today, I'd be selling for a decent profit. I'll just go, take that money and enjoy myself a little bit. But I did that because I was like, the model's saying it's super cheap. I'll just blindly listen to the model in this instance just for fun, and it's turning out really well. Best book, Kotkins Stalin. Wait, I don't know what the second part is. Is that question? Are you questioning whether that's the best book? But yeah. So I mean, I'll kind of just summarize my general thoughts on the market. I think we're going to see a lot of um, really good um, investment opportunities here. We haven't seen capitulation. There's still a lot of people who are like just completely bullish. So the capitulation hasn't been achieved, but that doesn't mean we need capitulation to start investing, right? Again, like I'm buying Facebook. I'm still buying 3M at these levels. I mean, it's all listed on the portfolio, the ones I'm accumulating, and there are some stocks that are going to be introduced as some stocks are exiting because I'm saying bye bye to them. Yeah. What do you mean by YouTube partnerships? Like, oh, you mean like me working together with other YouTubers? I'm open to anyone who shares my values. So they have to have a semblance or sharing of my values. So I already did like a live stream, for example, with Eric at Investing Sucks, and I'd say me and his values align. Strongman Personal Finance, me and his values align. So I'm always willing to do stuff with people like that, right? Um, we all have different personalities, but like as long as the values align. Like for example, I don't believe it's a prudent long-term strategy to what I guess the term is called grifting, right? Because can you imagine, like, you just grift a bunch of people and then you're just like walking out one day, you're like this huge YouTuber, and then like you see someone that you like, they look at you, you like completely screwed them over. Like, how do you walk outside? That's my question. So yeah, it's I think a really good just long-term strategy is just provide value to people, and then that's how. All right. No, yeah, Samuel, it's late. This has almost been a 2 hour and 40-minute live stream. I mean, I've been having fun. But yeah, have a good night, man. Um, Capital intensive or asset light stocks? Depends. No, that depends on the environment we're in. That I'll prefer one or the other. I really like asset light stocks, like software businesses. Oh my gosh, I love them. Like Google's asset light. Facebook's asset light. Dropbox is asset light. Adobe, all these companies, all those tech stocks, asset light, right? Awesome. Um, Embracer owns tons of games, and developers like Gearbox owns Borderlands, Dead Island, etc. Yeah. Gaming stocks, the gaming stocks are always interesting. I had Activision. It's gone now. It was taken away. Well, I chose to sell out because it's going to be taken away. So, that one was a good one. But yeah, gaming stocks, asset light business example. All right. All right. Um, I think I'll head out, guys. It's been a really nice stream. Thank you guys so much for these questions. Noam, if you're still watching, don't worry, I'll get the data over to you pronto. Asking me, is Microsoft overvalued? All right. So he's probably waiting on that drop ship. So you need both. Oh, I'll just ask you if you need both files. All right. Thank you guys so much for watching. This has been, it's been nice. I've been probably the least unprofessionally dressed. I hope it was a relaxing, just a chill live stream. And hope you guys enjoyed it. All right. Yeah, it was just a hangout, Patrick. So, and see you guys. See you, Apollo. See you, Greystone. See you, ABC. All right. I'll head out now. Oh, see you, Julius. Good night, everyone. I'll see you guys in the next one. Bye. Almost forgot to end the broadcast. That was fun.